morning. Good morning to you. Is that singing in the rain? Oh. Yep. Another boring day. We'll see what happens. I'm not really sure like AMC needs to go much below 470 or 469. I said yesterday 462, but I looked at it again and there's some fib supports that are there, and I think that makes sense to me if it hits the fibs. So it may not go down as low as I thought. That's okay. I was doing a measurement anyways that was based on this top, so yeah. Some of y'all are probably watching GME like with some nerves right now. I'm not particularly concerned at this point because, well, and I'll talk about this in a minute, but there was something that was really bugging me about GME. And I mean, it's possible this breaks down. Don't get me wrong. It's not impossible that this is a breakdown. So it could be a breakdown. But I don't want to like put it into and say, yeah, this is definitely what's happening. Oh, you're in Vietnam. Very good. When do I think GME will be below 20 and AMC below 4? Honestly, if AMC is in an accumulation state, it doesn't need to go down below 20. And I know that there's folks that are going to look at that and say that's ridiculous because there's a breakdown on a wedge and you would break down really low. Fact of the matter is, if we broke the wedge, I think we're probably going to head pretty far down, like back down to like 14. So if you're looking for like a low buy-in, that would be where it is. But the ship hasn't sailed yet. There's one really key factor in all this, and I'm not gonna pretend like it's over until it's over. So, excuse me. Yeah, no, there's nothing wrong with looking for bargains. I don't think AMC's, again, it's the same deal. Like in a breakdown, GME goes to probably to like, in my opinion, it goes down low, like to like 14. I don't know why you would stop at 18. I think people are looking at this previous support over here, thinking that it's not going to go back below 14, but all I can say to that is if you're going to measure the range that way, you may as well go low and do a spring action and hit the creek. So, like, in my opinion, you could go down to like 15 or 14 if there's a breakdown. I think AMC can go to 380 if there's a breakdown. And I'm using the word if because it's not there yet. And I was looking at GME yesterday, and the thought occurred to me that this localized area doesn't look unhealthy. The AMC localized area looked a lot more like distribution. This one has some of that vibe, but it's not like, you guys are like, oh, there's a cat here. Yeah, but it's not really like doing anything that's super distributive here. Like, the volume is mostly in these like bottom spikes, like these spike downs going into these lows. So there is volume into the tops, but like when you actually hit the peaks, the volume's pretty low. Most of the volume is concentrated in the bottoms, and that's a lot more like a accumulation. So the thought occurred to me because I was talking to a buddy on the Discord, and I was thinking about how the setups for in a Wyckoff scenario are often premature. Like we think we know what's going on, and then we look back later and we're like, oh yeah, that was just a really small area. And it occurred to me that when this came back up, and there's different ways to look at it, because if you're thinking this is distribution, you would put the automatic reaction here. But the thought occurred to me that if this is what I think it is, and I think it is, because you had a bottom, then you had a push up, so like a buy-in, and then you have a new range. And the new range is not breaking down. I mean, it's just getting started, really. You guys are like, well, yeah, it is. It's breaking down right now. Well, we'll see. You know? Point is that this push up right here, this is a wave that's getting you into a new, it's landing you up in a new area. You know, if we were watching any other range like this and we saw this kind of a move, we would assume that this area up here is now its own thing, you know? And I don't really feel like that has changed. So I know that the folks that are talking about 18, they're not necessarily wrong, because you could have a breakdown and you're probably going to go to the next support, right? So like they're looking at it thinking like it's inevitable, it's going to have to break down. I don't know where exactly the inevitability idea comes from, but they're looking at it and saying, yeah, it looks like it's going to break down. It'll go back and through these like low regions, but we already went through there. Like we already combed low. We already traded that area. So that's why I'm like, I don't really see the point in coming back down. It doesn't make sense to me. You know, maybe the idea is like, oh, we need a double bottom. But I'm kind of the opinion that if you go down, you're going to go down. Like, I think you're just going to pass through it and go right down below 18 again, because this would be like a way to go back and check the creek. So that's where I'm at right now. I'm kind of in that mindset of like, I don't really see the point in going to 18. I think if you go down, you're going to go lower. I think you'd at least go down to like probably the 1680 area. That hasn't been tested again. Maybe 17. But again, like this is its own region. And the thought occurred to me yesterday as I was looking at it that this never made a higher high. So like on AMC, when we were looking at the range locally, we were thinking about how this could be a phase B top right here, because it technically broke this trend to the upside and then it made another high afterwards. So I was like, well, it could be a phase B top. But then I went back and I looked at GME and I noticed that in GME, this is really important if you're doing a range here, GME never made another top. So, and then when you go back and you look, yeah, it broke this first trend, but that's about all it did. And then it just kind of has like a halfway distribution and comes back down. So if I'm looking at this as a potential range and I have an auto reaction, this could just be like a support, and then you could go up for a phase B top still. Like, there's nothing that says this area right here is somehow now turning into distribution. In fact, I almost kind of think the opposite. I think if it gets above the current creeks it's on, it's going to be like a localized spring, because in a local time frame, like you've also got like a bottom support at 25, and it's really small, right? But it's doing this kind of like double bottom action. And we could go on and on and on, you know, in terms of like scale. But Wyckoff is not really best used for like tiny scales. So unless this makes a lower low here, which would maybe be a sign of weakness, and this is where I was at before, because I was saying, well, I don't really understand why people are saying it has to go to 21. You know, there were folks that were saying, oh, it's going to go to 22 or 21 again. And I'm like, I don't really want it to go below 24. This 2390 hit. So my thought is, if it comes back up, we may actually go into an actual phase B. And this is something I've noticed on GME, because GME doesn't always make the spring. It's got a little bit more of a pressure buildup behind it often. And I mean, look at the volume being put down into this, you know. and just how it's not making lower lows, I find that to be very interesting. So what I'm thinking is that this may in fact be like a phase B move, and we were just thinking it was going to happen here early, that this was the backup right here, and then you were going to just come up and then go ahead and make your phase B top. This is what I was measuring out. Remember, we were measuring out the move to like 35, and I was saying, well, it just has to come back above the top. Okay, so I'm looking at it now and I'm like, well, on the big picture, technically it never made another high. So technically it's just been in a downtrend. That's what it looks like to me. It's just been zigzagging down, like it's a simple correction at this point. There's really nothing else to say about it yet. Like, it's a retracement, and it's probably an 854 retracement. So that's good news and bad news depending on how you think about it, because what that means to me is that it's still probable that this comes up and pushes the high creek way up here at 40. And I don't think it necessarily takes off. I think you could have an LPS motion, because technically after a phase B, you could come back down and retest and just go. This often looks like almost like a inverted head and shoulder. Or you could come down and, ultimately, like, you could come back and make a spring action, because you can't jump this creek. That's usually right here. That's the reason you'd make a spring. And then you would like hop over potentially, right? If this all works out, and then you'd go into an SOS state, and then you would leave. And that's it. That's all a Wyckoff scenario really is the build out for this. So at first I was kind of like, well, maybe this is already done and it's going to be, this is like a finishing action. But GME has a lot of space. Like, I'm in the mode of like, we got to move fast. We got to move fast, because like everything's kind of timed out to this like 21st marker and all this stuff. But it's entirely possible we do get a pump up into Friday or into Monday, and then still have to come back down and make a spring, because, for example, if you just rocketed, let's say you rocketed into this Friday to 41, you're going to get an incredible amount of people talking about it, thinking it's going to go really far. But it might, but it also could come down and just do a bigger LPS and just go. That's possible. And I really don't think it would be there. It'd probably be way back to here. It'd probably be back to 29.47. But it's also possible that you just kind of break down and head low. And I think that at that point, you'd be going back down to test this other creek. And there's other things we could talk about. Like, there's a steeper one right here and all that jazz. Like, it could go pretty low in a spring action, if that's what ends up happening. But so the thought had occurred to me that, like, I was rushing the range because I saw AMC go high. I saw AMC push over that outer creek. I'm seeing AMC kind of pushing into a corner right now. But then I'm looking at GME and I'm like, that doesn't really exist on GME. There is no like rush. And I'm just kind of looking at it like a range, thinking to myself, well, I mean, there's not really any precedence that says this can't just be like a bigger, if this doesn't make a lower low, okay, that's what I'm trying to say, is if this doesn't make a lower low, this could just be the backup after an automatic reaction. If it does make a new low, it might be a sign of weakness, meaning that the sellers are strong and they can drive the price down later. And you're going to go for, in that case, you'd go for like a massive up thrust here. You'd probably go all the way back above 50. It'd be a big move, but it would ultimately be destructive. So I know that that's kind of annoying, because you're like, well, I don't want to wait around forever. And some of you may have options and you're thinking that it's going to be gone by July and all this other stuff. Like, I'm with you. Like, there's things about that are really frustrating, but this is not so late in the game that you can't make changes in your decision. Like, if this breaks out and it pushes above 29 or 29.47, you're probably about halfway there, but you would expect it to possibly go up and even press this 40-50 level. but that's going to be like more than likely a localized top. So even if you thought that it's going to run after that, I would still be like, let's go check and see if it did any of those checks, because we probably still have an LPS where you back up again and then go. So anyways, this much makes a lot of sense to me, and it seems very probable. And then based on the larger setup, you can see why I might think that. Notice that when we came down and bottomed here on this kind of like little mini head and shoulder action, right? We made this big reaction move. I would say the same thing is likely going to happen here. Now, I can't really prove this beyond a shadow of a doubt, because that would be crazy, you know, to say like, oh, I can prove it's going to happen. Can't really prove it beyond a shadow of a doubt. But I'm going to say again, if this doesn't make a new low, I think this could just be the support after an auto reaction. And then you could basically have a phase B top up here. And that, to me, makes a lot of sense, because we never made the high. We never pushed this outer creek again. So it's an attempt, phase B is an attempt to check liquidity and also continue to explore the range. So we really haven't explored this range very much. So that would be like coming up again and making a distribution above 33. It doesn't mean that you have to push this creek. It's just often that's kind of what happens. It really could be a little lower. It doesn't really matter. Okay. It really doesn't, because at this point, even though this is like your outermost resistance from these two peaks, that doesn't really define the range. At this point, this top will then define the range, no matter where it is. So if it's a little lower, it'd be like down here. Does that make sense? Because this is the range right here, not this guy. This is a buying climax, but this is a distribution, right? So this is a sell-off, heavy sell-off, and then you have a new range, which could be a reaccumulation. Okay? Gap and golden cross around 1980-ish. Yeah. Well, and that's kind of what I'm saying. Like, I get why people are saying like, oh, we just dive down there and go for it. There's a couple things that Wyckoff doesn't do. Okay? Wyckoff doesn't really do in terms of like let's just say this, like in terms of like a larger structure, Wyckoff doesn't really do stuff like a wedge. So if you're looking at this as just a wedging action, you would say, well, look, man, I don't really know about all this Wyckoff stuff, but I think it can just go down and get to that low point and then break out of the wedge, right? And all I would say about that is then I would just look at your retracement levels, because if that's kind of what your thought is on, because you have to remember, okay, this is either a bull operator or a bear operator. I'm talking about the composite operator. So if this is a bull operator, would you want to go down to get that mark? Ask that question. Just ask the question. It doesn't have to be complicated. Just ask yourself the question. Do you want to go down and go ahead and get that mark if you're a bull operator? What would that accomplish? And if the answer is good news, like you can accomplish a lot of things, so you can get liquidity checks and do all this other stuff, you might do it. You can trap in shorts, whatever. All right? You can terrify longs and get them to sell. You could do that. All right, but if the answer is that, hey, this doesn't really accomplish what a bull operator would want to do in this case, it may not be in the best interest to go down there. I don't really care what's there, whether it's a gap or some kind of a golden fib level or anything, you know? It just depends. And so if I'm looking at this and I think to myself, if I'm a bull operator, how do I navigate this? I'm probably going to look at this and say, okay, there's a dozen different ways I can go about this, but if I go down to 1980, where are my fib levels now at? Okay. And frankly, at that point, you're probably still in okay shape, because you could get a 62% retracement at 1980 that gets you back up to 34, but it barely pushes like the previous high. So what I would say to that is, at least for now, again, it's debatable. I definitely think it could get there. It's not like it's not possible. The 1970 mark is, you're kind of like, yeah, I mean, it makes sense. And you can see the fib levels don't look bad. They look like retracements back to some previous areas. But just a 62% break, which is usually like a big break on a wedge, would get you to 34. So you're kind of pushing your luck there. You're basically now making what I would say is like a sign of weakness in this range. You've already had an auto reaction. And then you end up only barely getting above the top at 34. It seemed like, if it were me, and I'm not saying there's a one size fits all for this. There's not. But if it were me, it would seem like that's more of a bearish setup, because you have an opportunity to create a wall here that's lower and sort of stifle like a more healthy natural range from occurring. So by driving the price back through here, yeah, you could accomplish something, but I don't necessarily know if you need to do that. And then also, is this something that could be accomplished later? Because the other thing is, in a spring action, you could come down later. There's nothing wrong with that. You could have a terminal shakeout at a later time instead of dropping the price now, and what I would perceive as a sign of weakness. You could buy back up to the top, check the top first. Now you have a phase B top, and you can do whatever you want. You can go back down for a spring later. So that's another question I would ask is like, is this something that is perceived as inevitable because you see that, oh, there's a really important target there? Is it something that you could do later? Because there's always a possibility that you're right, and we end up at 1980 or whatever later, for some kind of a spring action. And I wouldn't bat an eye at it, but this to me looks a lot healthier than just driving the price down right now after you've already created a local support at 22 and had a big buy-in, which is your auto reaction back up to supply at 33. Okay, so let me just put it this way, all right? If we went down to 1980, I would be a lot more skeptical right now. Just hear me out. I would be really skeptical of this as a range, because I would perceive that as a sign of weakness. Like, typically, not always, but typically, if you've made that auto reaction and you are on a healthy reaccumulation, you do not want to immediately go back down and make a new low. If you go look at distribution schematics, like redistribution schematics, that's usually what happens, is you make an automatic reaction and then there's no secondary push up at first. There's instead a new low made. Then you go up and you basically start UTs. You basically start up thrusting back towards the top in order to sell off. So I'm not going to advocate for it. I can't really advocate for anything, I guess. I'm just saying, like, from my point of view, that's a lot more negative than I want. I don't mind going down there. If you guys think that that's something that has to happen, I'm like, okay, whatever. But if I'm an operator, personally, I'm like, no. I don't want this to set up in a way that encourages shorts to drive the price down on an upthrust. I'm going to instead drive the price up now, distribute first, trap some bulls in the play, okay? And then get the selling pressure from that to drive the price down, to trap some shorts in the play, and then reverse this stock like no other, right? That's more what you want to see in a long game, okay? And I don't think that driving the price down right now is some kind of a checkbox. Like, I could see it happening, but I would much rather it happen later. And then also, we don't know, like, if there's even a liquidity need. So another thing is, like, I could see a liquidity need to come back up right now. I can't really see a strong liquidity need to come back down. You might disagree, because you might say, well, Booksy, turn on your VRVP, you'll see that there's not as much trading right here. And I already can tell you, yeah, there's not as much trading right here. So is this a place that would be adequate to come back to for a spring? Yes. But usually a spring happens after you've made a liquidity floor and then you dive down to low liquidity. So I'm all for it, but what I think we need to do is we need to form a bigger range. So here's what my thought is. I don't know exactly what's going to happen today and tomorrow. I don't know exactly what's going to happen going into this Friday specifically. Well, tomorrow we're not going to have the stock market open. But Thursday and Friday, right, it could be nothing. Because as we've already talked about, this little area right here is fair game. Like, technically, you could just chop here till Monday. Like, there's no real reason to leave. Like, unless you just want to go, like, and you want to cause some stir this week. There's not really any need to leave. There's no immediate necessary action to leave. Like, it's just kind of, you could easily just chop here and build a floor, which makes some sense to me. Again, liquidity for later. So you build a floor and then you have a floor for a spring. So it could make a lot of sense right now to just pile in the trading right here around 25.50 and build out a floor and then drive the price down later after you've pushed it up. Does that make sense? So it's not like, what I'm saying to you guys is not that there's no other possible way. There is other possible ways. And like a normal Wyckoff accumulation, again, it's not really looking for stuff like wedges. It's not really looking for these pattern breakouts. It's not really looking for head and shoulders. That's not really what Wyckoff is about. And I don't use Wyckoff exclusively. But Wyckoff works really well with the stuff that I use because I use waveforms. And I use what I call those cat ears, right? And all of that stuff is built on like Wyckofian ranges. It really is. So I wouldn't exactly know how to read this except that this is some kind of weakness. And I mentioned it again a couple times last week, but I was saying, like, I really don't want to make a new low here right now. I just don't think that's wise. And I don't think that if you're bullish on the stock, I don't think you want that, really. You might think you want it, but you don't. You guys are like, that's so arrogant, Booksy. I want it. I'm going to get what I want. You're wrong. It's going to go down and break out and then come up to here. But again, it's like, all I could tell you is if something like that happens, you got to be really, really careful, because if it drops low here, it's very likely a possibility then. It opens a big door, right, for this being a sign of weakness. Okay. So what I would prefer is to build up strength, and then it doesn't have to be here. I mean, I have it all kind of crammed up, but like if it happened next week, it wouldn't be a big deal. Like it could be the exact same thing, but like later, you know, and really taking off like around July 1st or whatever. It's July 4th. Whee! Fireworks. You know, you guys are like, what? If you're not American, July 4th is our Independence Day. Like this could all happen later on. You know, it could be after Monday. And that's kind of what I'm saying. Like, I don't really know where exactly this happens. It doesn't even really matter, because once you've established if this is a local bottom, once you've kind of broken out here, the rest just kind of writes itself. So I'm going to advocate, again, I'm going to be a bit more of an advocate for a later spring action, probably going to July 5th, and then and then go from there. And a lot of the dates that I have are kind of like pointing towards early July as like a more definite upward or downward zone. Now, AMC, on the other hand, a bit of a different story, right? Because AMC, on the other hand, is not... It's not really as friendly with timing right now. Like, we've got a lot less room. And this kind of leads me to something else, which is that when you have a stock that is kind of paired together, a lot of folks might expect that if GME had this kind of upside move, that AMC would have some kind of massive upside move as well. And I don't know what to say except, yeah, maybe that 570 would be back on the table. I don't have it currently like drawn out here. I was doing other things with like timing yesterday, so let me try to get back to, maybe see if I have it. I have something drawn out. Nah, not really. So I'll do this in a similar fashion, okay? So could this make a phase B top and have like a similar setup as GME? Well, yes and no. So like a phase B top, if it happened like, for example, Monday or something, right? You could easily come back to that 570 again. The cross section's there. The issue with AMC is that where it goes is very different than where GME goes. Because like if AMC pushes up there, it's pushing up above a very, very, very important center mark, and it's pushing back up towards a really, really historic creek. So there's a lot less space. And my thought is that you might get a more hyper compressed action. I don't know about spring action just yet. I'm not saying that, but what I mean is like right here, it may be more anemic looking, if that makes sense. So like if GME were to come up, and let's say GME tops over here like this, for example, AMC might do something that's a lot more like dramatic, you know, where it's just like very quickly kind of flushes, you know, and it might be a lot more pointed, if that makes sense, like in and out really quick, and not as slow and sort of steady. So I can see it happening, but I could also see if AMC does it, that AMC might have a deeper, like more massive reaction to it because of where it is, again, like historically. And then when you look back at this, could this also be the same thing? Yeah, because again, if this ends up being a bottoming action, and by the way, AMC's wedge looks pretty narrow. It looks like it goes down to near that gap fill as well. But if this ends up being a bottoming action, you could easily see this push back up, make a new top. Maybe we do get the 570. The marks we were getting last week for GME and AMC might still be there. And then you end up coming back down at a later time for a spring or a hook down here when you come back and check the creek. And there you have your gap fill, you know, and the deeper drive back through again, a floor. Now, what about everything else you talked about, Booksy? Because you talked about all this other stuff, and now it looks like you're throwing it out the window. Not really. It's not none of it goes away. Like, I still think that 494 is the center mark of the range. Like, I still think that, and it's not going to change anything. I still think that there's a necessity to not generate a hooking action underneath it. But this doesn't really look like it's even testing much of anything right now. It just kind of looks like it's pressed down beneath that 494. And also, I'm only showing you like one possible thing right here. I'm not showing you guys are like, that looks just like what already happened. Maybe it's already happened. AMC and GME are a little different in that way because AMC made a higher high here. Okay. So it looks like it already made a move to a new high, and it did. But again, if this is just like a localized auto reaction, another thing I could do is look at this bottom trend, and I'm like, yeah, you know, this low trend here didn't actually break. So it's, in theory, this was all part of the same uptrend. So again, small picture, it doesn't look like it. Small picture, it looks like, yeah, it broke. It made a new high. But big picture, this just looks like another candle on the chart in an uptrend. So it's very possible that, again, I misread it as an early advancement, and it really was just a top in the automatic reaction, since it didn't technically break this guy. And that might be part of the game here, is to sort of have it misread as an early advancement, and it's not. So it looks like it's getting ready to jump that local creek here. And I think we're going to see it on stream, which is great. So my thought is that, A, I was early, but B, that we might not have even made our phase B top. And so this could be a little bit more long-winded. Could it happen now? Yeah. But just like I was saying with GME, it's the same deal. Like, you're going to have, I don't even know where this goes. I'm not sure this even goes up again that high, but you're going to have a possibility that this doesn't what's the word? This is like a localized spring action, and this doesn't actually do anything all week. It's totally possible. So just keep in mind, like, there's a lot of space here. Like, lots could happen, and it could easily boil into Monday. So the way this is designed is very clearly like, oh, there's a ton of space right here that you could just mess around in and not advance if the institutions that be decided to not advance right now. Okay? I don't know why I deleted that. I want that number. Yeah, but Booksy, if that's a spring, why not just go? Why not just rocket to the moon on Monday? Well, this is the part that gets a little bit confusing, because if I'm right about the early advancement, so this is like flip-flopping, right? Then everything else that we've already talked about is absolutely at play. Like, this could be the spring for the whole range, technically. Or in some regards, like an LPS, because it's not going below the bottom over here. And you could just take off. What? The only thing I could tell you at that point is that it's sort of like what happened here, where you have very little in the way of setup. And I remember when when I was talking about this, I went and asked Stockfather. I said, hey, what do you think about AMC? Because I think it looks really, really bullish. This range looks really bullish right now. And he said, well, I'm still waiting to see if it, I would still wait to see if it makes an LPS and all this other stuff. And I'm like, okay. So then what happened here, right? Because if you go back and you look, and again, just kind of look carefully. I'm not going to take my eyes off the stocks for too long if you guys are worried about missing some big move. It's complicated. On the one hand, I look at this and I'm like, well, this is a weird range if it's a range, because basically what it looks like to me is if that's the support, then this would be your phase B top. So it immediately made like a phase B top, which is really strange. And then it came back down and made a support and then tested that support. So it made a support, bounced, stayed high here, and then it dropped below that support. Is that a spring action? Kind of. But it didn't go below the bottom. It just went below like the phase B support. But if I look at this as like a whole, and I'm ignoring like Wyckoff in general, and I'm kind of like, I don't really know what that is, it almost looks like nothing really happened. Like, you have a top, a buy-in, right? Then you've got kind of maybe like an early auto reaction, but it looks like it's part of the sell-off. Kind of just looks like a flagging action to me. Like, I don't even really see a whole Wyckoff range here. Like, it's very strange. It just kind of bounces out, finds that support again, the midline, and then goes. So there's limitations on what we can do as traders in terms of understanding a range, because sometimes it's as simple as it just goes back and finds the support and it goes. I don't really see any kind of LPS here. I see an SOS. That's kind of obvious. I see an SOS. It pushed higher than the range here at 371. It backed all the way up to the creek, and this is part of the reason why I was so excited, because remember when this happened, I was like, I already kind of bought in, but I said, we need to come back down to like 320 or whatever. And it went a little lower, but I said we need to make support and push up, make support, and it did. And I was like, this is perfect. That's what you want to see. And then it pushed up again, and then it made support again. I mean, like, it just kind of hit all the boxes for that breakout. But what you never really see here is you don't really see any LPSs, like not in regular trading hours. Like normal range, after like a phase B bottom, if there was no spring, which again, it's kind of what it looks like to me, like maybe there was no spring. It just kind of looks like this was your auto reaction. Like, I don't even really understand it. And then it quickly made a phase B top, and then it just basically went sideways, and then made a phase B bottom, went sideways, and then there's a tiny little spring, and it's super bizarre looking. It just looks like a flag. But when it left, it just went straight to an SOS, and that's bizarre. There's like nothing here, right? The only thing you get is that back up to the creek. So that move is very bizarre in terms of like a Wyckofian move. Like, it just looks super, almost like bare bones, right? So the comparisons that I was doing in the last two ranges have a lot to do with that, and then the waves and how the waves are setting up in relationship to this particular creek. So going to like current time zone right now, like where we are, that creek is right here. We've already kind of made the drop. So if you're wondering like, well, what happened to this other idea that you had? It's not gone. It's really not, because I don't know exactly what happens anyways. You know, all I'm able to do is kind of estimate based on the way these waves are building out and how the range is set up. Could this just be a bouncing reaction where you get a high buy-in? Possibly. Could you just gap up Monday into an SOS? Yeah. How do I know the difference between the two? It's not that complicated, okay? If this is a spring action, this is where it's happening. It's happening below a phase B support. It would have to be, it's a micro thing. It almost doesn't make sense, right? But it'd basically be beneath this 489 level. So the low from over here. Again, I'm telling you, if you're confused and you're like, I don't really get how you would understand the difference between the two. It's very minor, but you can do it. This doesn't really look like much of a spring to me just yet, but we might see one more try to nosedive. But this looks okay. See how it's like these high bounces? This is a really good sign. This looks more like accumulation now. It was looking really distributive up here and up here because you had really high volume top up here, but I think it's just a buying climax, right? And then you had a low volume bottom, which I didn't really like. I don't mind the sell-off being low, but I don't like that the buy-in was kind of whatever. But, these aren't too bad. This is obviously distributive. And then this looks pretty good. These are like nice high bounces. You're not spending a lot of time in these bottoms. You're kind of dipping in and then trading high, dipping down, trading high. That's a really good sign that you're in a more of an accumulation state, not a distribution state. So far, so good. If this is some kind of like weird flag range where you're basically just like very quickly going through the motions of top, bottom, top, bottom, top, bottom kind of stuff, like what I just showed you a minute ago, then if it finds support at 489 after coming low, you would expect it to have jumped the creek, and it did. Okay. Essentially, this is where the question marks come in. Again, it doesn't really matter what happens here. As long as this range forms out on the bottom like a spring, you could come back down again. You might even come back down and make a new low, because technically you could do that. You could come back down and make another low. It doesn't really matter. Okay? The difference is that it doesn't come below this bottom. Okay? That's the big difference between that and like a distributive action right now. So if I saw this come down even one more time, and then let's say, I don't know how this could happen before next week, but let's just say in theory, this all happened today. I'm just going to draw it out that way. I don't think it will, but if it did, cool. I don't know. In theory, like if this went all the way back up to the top, above the top, and it hadn't made a new low here, my opinion would be that this could be an SOS motion. I would still be worried if we closed well beneath the range. So if we like open and close beneath the range and we just have this big pop, that would be bad. So I would look for a couple signs. One, that it has a backup to the creek. So the creek in this case would be really high. So this is like your hyperactive scenario, okay? Where you've got these like massive moves. So you have a very, very fast push above. Okay, let's say it gaps up into Friday or something. I don't know. This is all that would have to happen like pretty much in the same trading day though. Like you wouldn't want to see it again up and then down in a regular trading session, because that's very distributive in nature. So meaning like bulls pushed it and bears pushed it back down, and it opened and closed with a wick above. But yeah, in theory, this could just be a backup and then you could just go. It's a big backup, yeah. But there's massive swings when you have moves like that. That would be different because it never made a new low here in the range. So that would tell me that this sets up as an SOS. And frankly, again, like this is abnormal. Like normally we would expect it to come back up SOS in the local range, this little guy at 550, come back down and then come up. This is what we missed completely in that May setup. Like there's none of this here. This is all like completely gone. All you see in May is this. Like it's just that. You don't see any of it. I'm talking about during normal trading hours. You see none of this. So if you're thinking like, well, if it's just like it was before, this is the way it might go. All right. And I did the same thing on GME really, because I was looking at it like, well, technically it's the exact same setup that I've got drawn out right here. Like technically this would just be an M cross and then you jump up, you make a phase B top, you pull back out of that trend. So if you have a trend, for example, like here, you would pull back out of that trend, you'd make a bigger LPS, and then you would just go. So if you're wondering like, well, where did all that stuff go that you talked about yesterday? Are you really just changing everything? No, it's all this, but it would be like hyper compressed because that's the way it happened in May. That doesn't mean it's going to happen the same exact way this time though. So even though I'm looking for a spring bottom here, I don't necessarily think the spring bottom has to result in a higher high. And if it didn't result in a higher high, if we stopped out at like 570, then I'd be like, okay, it's not a big deal because we're just in a regular larger range. We're going to have a phase B top. And y'all might not want that to happen. I get it because you're looking at this like, well, it's already been like a month. Why do we move in like 2 days and then spend a month going sideways? That's considered cause. So one of the things about Wyckoff that I really like is the idea of cause and effect. And the cause is the buildup. The cause is the amount of time you spend accumulating. You don't have to agree with it necessarily, but it makes sense to me. You don't have to agree with it because I know a lot of people think that the market is not based on supply and demand at all. And so when you hear me say it, you're gonna be like, whatever, I'm gonna ignore you, or I'm gonna be skeptical. That's fine, okay? But Wyckoff was around when the trading was still paper trading, you know, and he watched deception happen, he watched manipulation happen, and that's why he decided to write about it, because he was like, wow, these institutions really game the system. Here's what they're doing when they're gaming the system. And basically what he was saying is that there's the laws of supply and demand are intact, and so the longer that you build up a cause, the more of a run you're going to get. So the more sideways action, the bigger the run. And that's how point and figure works. And point and figure is probably one of the most accurate things I've ever seen in terms of measuring a range and then the distance that you travel after that range. So if you're wondering like, well, what would this do in effect if we spent a whole nother, 10 days down here? Well, I'll tell you, it would probably add to the likelihood of a bigger run. This particular move right here, although I really want it to be high, could end up being quite subdued, you know. I found some targets yesterday that were more like in the 15s. And it kind of makes sense if you look at the bigger picture to see like this kind of double up thrust move and to not really necessarily even go to 18, which is another one that I had, 1887. And it's based on, I don't know if I still have it on the chart. It's based on that setup. Let me see if I still have it. Yeah. So I went back and I looked at, remember that breakout module we were talking about yesterday? I think all 50 of you were here. It's a really quiet day yesterday. But it was like a really important little piece of information, which is that the way you can measure these breakouts and then the subsequent ranges is built into the initial drop. I went back and I did a very precise measurement. I made sure that it was exact. And I took that exact measurement here, and then I actually applied it to the bottom. And what I found is, you remember that marker that I picked out? There was one that was at like 680, and there was another that was at like around 610. Well, turns out that if you take this measurement on that initial drop, that drop-in measurement, just like we would down here on a micro, and it works consistently on all of these, setups. It does. I mean, you don't have to take my word for it, but we went through it all, and I showed a few yesterday, and I was doing it again last night. And anyways, I applied it to the bottom here. I thought, well, if I apply it to the bottom, maybe it'll match one of my existing things, and it did. It was like 2 cents off. So now instead of saying 611 or 610, it says 613. And then the high was 1574, and I went and checked in extended hours. We definitely did not hit 1574. It's very close, in my opinion, to the 1660, which was that gap down level. So, you know, those two price targets have come up quite a bit, is the $16 one and the 1574. And I've been a bit of a boring listen when it comes to these price targets, because I've talked about the same few several times, and what I've usually said goes along the lines of this. I said something like, when we hit the top here, I didn't think it necessarily hit the high target. I said it got to that 14 target, which is close enough, 1330. But I said I had two targets. One was 14. The other was more like this 16, 17 area, maybe with an extension up to 20, because that's where the creeks were seeming to be to me. And I looked at it, and I was like, we got one target already, and I don't know if we'll get the other. And that's kind of where I've been dancing around. So I'm not flip-flopping when I say something slightly lower or something slightly higher. It's different ways of generating price targets. I think they're all pretty valid and very possible. And I think that the 1550 one makes a lot of sense. The 1574 one makes a lot of sense based on this setup, because I went back again. I looked at these creeks. I drew, 8 or 9 of them. But I looked at the main one that I had, which I was calling like the Cattier Creek. And this is the one that I said technically looks like it was already hit. But then if you look at the extensions go beyond that creek. It's not like that creek is the end-all be-all. There's several times where there's extensions above it. And you can see that like the 1574 mark intersects really, really well right in this little pocket. And so I find that to be a very compelling one. I tried 1887 with those, and I was like, where would 1887 be? You know, because I was like, that was a really good target too. And I don't want to just throw it out the window. That doesn't make sense to me. Like, I wouldn't want to do that. Well, 1887 is here, but it would have to be a later hit, and it would push the creek. So it just sort of depends on what you may think would be the purpose of it. I think if the purpose is to push the creek, you're going to go to like the 1887. And I don't really know. You know, if it's bullish, I would think you would want to push the creek personally. Like, you'd want to make that push. If it's not like as bullish and the goal is really just to kind of get the liquidity and get up there and then do the sell off again to put you maybe at a slightly higher place, for example, get you wrapping around the 613 mark, then I don't really think it's necessary to go to 1887. And I'm looking at it and I'm like, I don't know, man, that measurement couldn't be any clearer. I mean, it's really precise. Seems silly to some, I get it, but the way I've done these measurements in the past has probably given me the best targets I've ever had. And I mean, and there have only been a few times I've done it, but these usually end up being the stronger targets. So I know it's a weird way to do it, but I think it has a lot to do with what you might say is like a parallel trend, and that might be part of it. I also think it has to do with what happens here, like the undoing, right? The unwinding of liquidity. And I already talked about this symmetrical shape and how this looks to me like it's all kind of finishing like a gigantic schematic from a year ago, like a 1-year cycle into June 21st. So I'm kind of thinking that no matter what happens, up, down, whatever here, that 1574 is a really high probability low target. Does that make sense? And part of me thinks that if we got there, I'd probably unload most of the position that I have. And then if I were in that position where I had lots of calls or something, I would probably unload them and then maybe wait and see if there's an extension. But it could be one of those things where we hit 1887 in like pre-market and then it opens at, 1574, in which case I'm not going to like hold my breath. You know what I mean? So All right, 494. This is the level that we don't want to hook on, but I don't think it's over yet. So the only thing I don't want to see here at 494 is I don't want to see, that ended up being pretty accurate. I don't want to see it drop down in like a hard sell-off action, if that makes sense. Like, I don't want to see a big spike and then a big drop. I don't really care if it rejects here. That's not the problem. And I don't even really care if it takes time to reject here. We could be here till noon and then it could reject, right? That's fine. What I don't want to see is I don't want to see a hard spike up followed by a really deep sell-off. This is a no-go. This is more distributive. Okay? That's kind of the inverse of what we've been seeing. This is fine. If it kind of stays elevated and chops up again and it doesn't quite make it and then it drops back down, that's okay. That kind of retracement would be fine. That'd be healthy. All right? That'd be much more bullish. That would be good. Same with GME. Okay? So if you're confused about some of the other stuff I was talking about, just know this. If we've made a bottom here and at some point, either this week or next week, we break out of this local creek, right? So it's hard to say when that would be, you know, because it depends on when you get there. But there's a downtrend. You can draw it. It's pretty easy. Pretty easy to see in my opinion. And honestly, I would look at the one from the top through these this peak on the 14th. I like that one the best. I think that's probably the strongest. I would be waiting and seeing if we find a support low and then locally jump the tiny ones, like I'm talking about like on the minute chart, jump all those guys, and then build out and eventually find support above 27.35. That to me would be confirmation of like some kind of a big eminent upside move. Like this to me would be a confirmation of that. And it may even be really nice to us and give us like a really clean hit on it. But it doesn't really matter that much to me. So that to me is a confirmation, and then you're probably going to get a decent 20% move at least, in my opinion. And I already know like the target for that would probably be up here along this trend. That's easy enough to do. Technically, again, I'm kind of just drawing it straight up, but this could easily be like a really low sideways action that's really boring and then goes up Monday. So it could totally just chill down here at 25 and then basically just have like one big move, not this kind of choppy upward move. Does that make sense? So I'm drawing it like it's going to go straight up, but that's not really, not often how the stocks work. In a lot of ways, sideways here would actually be good because you're creating a floor. Potentially, right? So I had originally thought we probably wouldn't leave, you know, we wouldn't do this jump. We'd probably do something like this week. It really doesn't make a huge difference either way. Not to me personally, but it might make a difference to you if you're thinking about how to play the week out. Yeah, this looks fine. It's back above the 494. This is kind of where I expect there to be a little bit of challenge. So from a bear perspective, when you're below here, you're going to want to try to knock it down. So if the price has already been knocked below this marker, right, you can see like what I mean. Like there's sort of this desire to keep it pinned. If you find support above it, which has happened, like it happened on the 11th, it happened here on the 6th. Technically it happened again on the 12th, you know, a little bit, and then we finally chop through it. Then you're in a position of demand being in control and you're going to push up away from it. And in this particular case, guess what? If you found support here, like today, for example, you potentially push up away from it. Now you're pushing away from this creek as well. You're jumping the creek. That's why my expectations for today are kind of low, because it's hard for me to imagine this is enough We didn't really get any kind of a retest on this jump. This is the local jump. Normally, if it's a spring, I drew out a little diagram for you guys. What it is it's like a hyper compressed accumulation range. It looks really weird. It often looks like this kind of quadruple flush because it's super tight. But it actually is just like a regular accumulation range. It's just rapid fire. The distribution is regular distribution range. It's just rapid fire. They look really similar, but the way that they build out is different. So I can't tell you exactly like we are here kind of stuff. I'm not going to do that. But what I would say is that the overall setup here, I think, kind of warrants a little bit more chop. Like I'm not really seeing like everything we would normally see in this kind of a range. So hard to say. I guess it could be it. There's a little M shape. It's just really fast. I mean, I guess it could be it. I don't know. It doesn't feel like enough to me. I feel like we need another one. One more push down and then a move. That would make more sense. Or like one more top, then a move. Make a lot more sense to me. Because one M shape is fine, but you don't usually see that even on the micro level. Usually you see two. So my expectations are kind of tempered on that today. If it goes up, it goes up. That's cool. You know, I'm not saying it can't. I don't want it to push above the top at like 26.14, for example, on GME unless it's ready to go. So I'd rather not see that, but I mean it is what it is. You could have it widen out here, I guess. So here's my thought is that you basically form like a new M shape and then you drive the price back down and then this hits like at a lower, or excuse me, a higher low, maybe at like 24.15. That could actually be enough to get you out here. And then I think you're going to do another, I honestly think we'll do another range. I can't imagine them running it. Unless they're trying to create some FOMO for Monday or something. I don't know. I have trouble like imagining that this just goes. I don't know. One of those happy to be wrong moments, I guess. I'm saying I don't know a lot because I don't know. This is a short week. Short weeks are either kind of crazy or they're kind of boring. Usually they're kind of boring. So you usually have lower volume. So similar situation, I would expect there to be some kind of a top and then come back down. And AMC's been chopping really high, so it might do something like that. IWM, I changed my chart a lot. I really cleaned it up because it needed to be cleaned up. I just got rid of everything except for what I felt like was the most important parts. Yesterday we jumped over like kind of the outermost trend that we had, which was like here. It's quite wide, and I don't even have it. I'm on the 4 hour. I'm not going to like zoom way in. We could pull back quite a bit. It's just a retracement if we do. So if we have any push, great. But if we pull back, I would just look at retracement levels from the bottom 197 up to the top right here at 201. Ultimately, we need to find support kind of where we are right now, but you can see why. So this is a historic support level for us in this area, 201.10. Okay, then 202 and 202.75. I'm giving you like my numbers. Those are the things I would like to see that cross. I think they're going to cause the biggest potential for a move. I went back and I measured it, and I'm like, you know what? It's super easy to be bearish right now because it feels like everybody's down on the market, but I still don't think small caps have had their turn. I'm not convinced by this price action here that this is going to be really hyper distributive. It's still holding, right? This whole overall momentum. I'm seeing a rounded volume, not like high volume in the tops. It looks more rounded. I don't think there's anything wrong with this. I see an RSI reset on the weekly. To me, it looks like it never made the extension. It never went all the way up to the top, and instead we just chopped. I just don't see it as done. So I went and I looked and I said, okay, well, I had this idea there could be an S curve, and I went and measured it out, and it's 252.91, I think, is the top of the S curve. It's enough to get you back above the high. The S curve itself is pretty large, and it probably wouldn't complete until near September, which sounds kind of crazy. You're like, well, that's way too long, Booksy. Maybe it's much faster than that. Okay, maybe. I don't know. All I can do and all I can tell you is that what I'm thinking at this point is that the goal here, hear me out, the goal of this was to do an SOS. And so if that's the case, then you're talking about building out a range right around 202. So 202 becomes like a center mark. So when I looked at 202 as a center mark, I was like, all right, well, that makes it easier because then you can build out a center mark and sort of build a cross, and then you can pin your S-curve onto that cross however you want. Are there steeper options for this? Yeah, there's way steeper options. Like you could go here. This was another one that I tried, and I was like, yeah, I mean, that one's pretty good too, where this is like the middle, and then you get there by July. You know what I mean? I don't particularly care. So this could easily be like some kind of like hyperactive, move where, again, it just kind of pushes up, hits the creek, and then goes, and you finish out. But I'll say this much. Normally, the inward and outward trajectories, they're typically like the same. So like the first and second move are typically the same. So like if we were to move like starting today, it almost kind of lands right between the two, sort of in the middle of August. And that's where my options have been centered around, is like that August area. Not because I want to like be like last minute, but because I thought it would probably take a while, and I didn't want it to be like, oh, I'm like, struggling to figure out how to do stuff last minute. So this was the first push. It's got a pretty simple to read trajectory. You could just take that and apply it wherever you want. You can see that it applies pretty well to where I am now. And then it would have to be, again, a rapid fire move if we were to go any sooner. So in theory, like I would say what's most likely is sometime between August 20th and September 20th. It seems the most likely to me, like in this pocket. Either one of these would work. As a measured move, I think it's totally possible. Whether or not you think we have a catalyst for it, whether or not you think that the market's ready for that, whether or not you think that means SPY runs, all of that stuff, I understand it matters, but at the same time, like it doesn't really matter to me. I've not really ever used news cycles other than like election year to really mess with anything. Like news, I don't think matters. I feel like the news is just there to support the move. And I don't know why, but I always feel like the technical setup's already there. There's never not a setup. So I don't buy into the excuses that the market pundits and even people on like Twitter and all this crap that are like down on TA and stuff. It was like the same thing with GME. It was like they were like blaming Roaring Kitty for the run up, and I'm like, well, there were so many things going into that period of time. Like people watching the options chain were watching an OPEX tailwind, which is still a technical analysis. I don't care what they say. It's still a technical analysis. You're watching behind the scenes, the technicals of the options chain. I was watching a breakout happen on a gigantic wedge with a target of 85, and it hit 80. I don't know, man. I didn't buy in based on options. I bought in at around here, like basically from 15 to 18 on the basis of this breakout and that setup. So like, I had no idea what Roaring Kitty was doing behind the scenes. I had no idea that the market was going to say it was a fake move and all this crap. I had no idea that people were screaming MOAS behind the scenes and that, you know what I mean? Like, I just didn't know. And it's like, people are always like, well, you need to pay attention to the options chain. You need to pay attention to this and that. And I'm like, look, I don't disagree with you. I'm getting better with the options chain stuff. But I disagree that I somehow need to be tapped into every single thing that's going on in the stock all the time. I do not. I do not find that to be helpful. I think that the technical setup is always there. Like, you guys, if this move happens, there'll be some dumb catalyst on Monday, and people will say, "Oh, it's this or that," or it's an options tailwind, or it's Roaring Kitty made a tweet, or this or that. I mean, like, there's gonna be something there that supports the move. That's the way it always is. I don't need to know the reasons how or why it work. I don't really care. Like, it doesn't seem to matter. Like, it doesn't give me any more information. And ironically, it's kind of like using a magic 8-ball where you're like, I don't know what the answer is, so I'm just going to wait until the magic 8-ball gives me an answer. It's like, well, that's silly. We should be able to look at this and understand at least something from a technical perspective. So I don't know what your guys' opinion are on like all the stuff I just said, but I know that no matter what happens here, there's going to be a reason. If we drop hard, it's because Adam Aron's doing a share offering, right? Like, okay, well, it's also there in the setup. If it happens, it happens. We'll probably see a move that's distributive, highly distributive first, and then all of a sudden he'll announce an offering. And you're like, okay, crap, right? There's always something, and somebody knows, that's not a myth. Somebody always knows. I believe that. I really do, because there's been way too many times, and we all know, if you've been around this stock for like 2 years, this is the stuff that Gary Gensler can't even comprehend it. I mean, he knows it's there, I think, and people at the SEC know that this happens, but they can't do it. They can't monitor it because it's not possible. They can't monitor every security in the market all the time and all the news and all the other stuff that goes on with it. But if you've been following one thing, like you've been following AMC or GME for 3 years, by this point that somebody knows. Somebody's always got the behind the scenes information, because it's always something. Like, we find out something later and we're like, well, there it was. You know what I mean? Clearly, this was orchestrated. Somehow they already knew this was going to happen, or they thought it was going to happen. I have no idea. I don't think that's tinfoil hat stuff, but I don't care. At the same time, right? So here's what I think we're seeing I think we're seeing a wave form out, really simply, on IWM. I genuinely believe that. I don't know if it's at its low point yet, but I did do a measurement, and this is a 50-50 move right here on this top that goes across that middle line. So that's why I think this is probably the middle in April. I could be wrong. It could be earlier, and we could hit earlier, but as a result, I don't think it's impossible that we come back down again to 191. A wave is a wave. You can see it here. Technically, again, there's not really any way for me to say that this has to be a certain way. This could go down for another month and then have a quick distribution and then go, and this could still be valid. It's just an S curve. It's just a momentum move. What I am looking at, though, is I'm looking a little bit at this RSI, and I find this to be very curious because, again, it kind of looks like it's poised to possibly drop, but then I'm looking at it then again, if you look at the M-shaped function here, it looks pretty much like this mirrored out version of itself at this point. And I went and checked, again, just to see, hey, let's look at these dates I picked out, to September 25th. Let's go back to the beginning. Let's draw a line between here and here on a high time frame. And sure enough, there it is, right? And I'm like, well, there it is. I don't know. So I feel like it's kind of doing everything that you would think it would do in a symmetrical build out here. And I'm like, yeah, I don't know. It could very easily be a giant S-curve because of the way this is built. And if you look at where the lows are, that's also kind of interesting because I didn't mark them off. I'm just kind of doodling it here. I could delete that part. But if you look at where the lows are on this this buy-in, it's right where that support is, right here at 42, and it's right where we are right now. So if this broke out right now, like if this finds support here and then like breaks out, I don't know exactly what that would look like. Probably a cross back above 202. I think that that's going to go ahead and rally and start a rally up. I think it's going to be like this motion, but jumping over the macro creek. And then I think we're going to start the uptrend, if that makes sense. I can see it. I don't know if it's like obvious to everybody, but to me it looks like a pretty clear waveform. And I'm seeing it as a giant RSI reset button. And again, like when you go out to the weekly, this isn't even. Does that make sense? So like, I personally think this is a big bear trap. I see other people think that this is a big bull trap. So you guys believe what you believe. I don't know why you would do a liquidity trap here for bulls before pulling the rug. It doesn't really make sense. You would do that here, but not like here. This is like not make sense to me as a liquidity trap for bulls. Most bulls are not sitting here talking about this setup. Most retail isn't. They're not looking at it like, some of them are. They're like, just buy the dips, buy the dips. But like, this doesn't look like a rug pull to me. It looks like a bottoming action. And then, yeah, at the next top, if it peaks above here, that would be a liquidity trap. So I'm talking to David Para. Like if it came above here, I would say, yeah, it's probably more likely. If it distributed high, like at 28, you don't really trap buyers in a bottom. You trap them in an LSPY if it's an LSPY, but this does not look like an LSPY to me, not yet. So the last point of supply would be like a bear flag. So like, you know, that in that regard, yeah, you could say like, sure, I think this is going to be like a bear flag and then drop. Clearly there's a lot of people that strongly disagree with the stuff I'm presenting. I'm okay with that. That's fine. We'll see how it pans out. This may not happen, you know, the way I'm thinking it's going to happen. And what happened again in May was very strange, you know. In theory, if it were going to be like May, this could come up, hit 27 on Friday, and then Monday just be way up here. I mean, that's kind of more or less what happened in May. Like, it would be that fast, potentially. GME was a little different than AMC. GME had already set up high. It had done like this kind of stuff. It had made a proper SOS action. AMC really kind of, I mean, it just didn't. So it just kind of raced. So they're very different. But sure. I can't, from a technical standpoint, I can't predict something like that unless we pushed above and came back down. I would say, yeah, that looks really bullish going into Monday, but we're not there yet. So can't say that yet. Same with AMC. If it pushed up high and then landed on 494, I'd be like, yeah, there's a strong chance here that this could just rocket, because if it lands on the midline support and it's above it, you have a decent chance of some upward movement. I don't think that's likely going to happen in that way, you know. We've kind of talked about different scenarios today and all that jazz, but makes sense. I mean, that's like neither here nor there yet. We'll know better on Thursday, Friday, going into Monday if it looks strong. So I was just talking about IWM. I personally think that this is a bear trap. I really do. I don't know for a fact that it is one, but I can see the waveform, and I think if it holds high here, I think we're going to just advance. I don't necessarily think it will do that per se. I think there's a possibility that we do need to go ahead and make that low down at 191, and it's not out of the question. It's just not. But really what it looks like to me is we're consolidating along the SOS, which is 202, and I don't see anything wrong with that. Now, there are some distributive options here, which would involve racing over the top and then closing back beneath it, things like that. But what we saw at FOMC, as distributive as that was, and it was locally distributive, it really didn't do anything. Like, it didn't push the top of the range. There's nothing about it that's like particularly disturbing. And it kind of just makes me feel like, well, there's just a widening here that's going downward. That's usually kind of bullish if it breaks out. It takes you back to the top. It could be like a method of getting back over the creek again and getting that buy-in, right? If you come back over 210. So it kind of just, to me, it looks like another potential setup for a swing way back to the upside. Now, if I'm wrong, then what probably happens is that within the next week or so, you reject at 202, and then you would then nosedive, I guess. I don't know. Like, that's kind of the only place I can see us having. We need to have that rejection, I think, on that top one more time if you're going to drop. So that would be going all the way back. Look at this top from way back in August of 2022. If you want the number, I think it's 202. I think it's like 201.99 or something like that, but 202 is fine. I think that's where you would have to hit in order to have a strong rejection. It doesn't seem likely that you wouldn't at least touch it before trying to drive the price down. So I think a lot of your action is going to take place right here. And frankly, again, I'm kind of looking at this like, yeah, to me it just looks like a giant widening that is poised to break back up to the high at 209. And that gets you over the major creek. So I'm not seeing anything in volume to me that indicates that this is a topping action or this is a topping action. This is really low volume tops. So the high volume tops would be very distributive. You get a lot of selling on high volume tops. Kenny. I don't know that guy. He's crazy. The reason that it's easy to flip-flop on AMC and GME right now, and the reason why a lot of people have low targets and a lot of people have high targets, and a lot of people are not really sure, is because you're in the middle of a range. And that's why I'm starting to think that this is probably more likely. Like, we all think it's going to be like this big, fast move, and it's got to be this massive squeeze move. I think it'll happen, but it may be kind of a letdown, right? First, a letdown move first, where you're just like, oh, I thought we were running. You know, why didn't the OPEX thing happen the way we thought it was going to happen? And it might be like the next week or something like that. I don't know. It just seems like that would be a better plan. And the fact that people have such radically different opinions here, again, I think it's a basis of a range build out. Whenever we start a range, you're always kind of back and forth about ups and downs, because all of the initial price targets are pointing you different directions. Like when we started this range, remember the cross we had? Like one was this way, right? And there's a number of ways we could have drawn it, maybe more like this, because that's where the trend was. One was this way, and the other was, this way, where you're like pointing down. And it's like, which way are you going to go? You know what I mean? And we're waiting to find out. And everybody's like, you got targets up, you got targets down. And I had, ironically at this point, I had said that, well, oddly, I did not know this was going to happen. But I was like, well, this has happened before. I said, oddly, there's been times where you've had diamond bottoms that look like diamond bottoms, and they end up breaking down first, and then they end up breaking back up, and you get like this massive like double swing. And that's almost exactly what happened, which is strange. I find it to be ironic because I was saying it as like a very like out of left field possibility. In my time, I was like, well, I've only really seen it once. So I'm thinking like, this probably isn't going to happen, right? And then it happens and you're like, well, crap. It broke down and then it broke back up. And that's why I was like, well, maybe we're just going to form a giant diamond. And then I was wrong, right? Because it didn't actually form a giant diamond. This didn't actually compress down. It actually just rocketed. So made the jump and then just went. That I did not predict, that move. I figured if it broke out, we'd end up back up here. That's just because of the 618 retracement. So I did say 40 and like some other number up here, whatever that 786 was. I think the 618 was actually a little bit lower. It was like 4130 or something like that, right around here, this little ledge. That was just me looking at a possible reaccumulation range, but I was thinking that this had to finish first, and it didn't really. It kind of just went. So just to be fair, it's not like I called all of it perfectly. But anywho, so when you're in the beginnings of a range, when you're like working it out, it's always like, oh, there's targets down, there's targets up. What that tells me, whenever there's like that uncertainty, even with myself, where I'm like, man, I don't know, man. I'm seeing ups, I'm seeing downs, I don't know. It's probably just the reason that you're thinking that, and the reason I'm thinking that is probably because it's just going sideways and you don't really know. And frankly, like, you shouldn't know. That's not by design. Like, that's the way that institutions run the play. So they don't want you to know. Like, institutional operators and algorithms, whatever you want to call them, they're designed that way. I don't care if you think it's all run by computers. There's intent behind it. A human being designed it, and they wanted it to do certain things. And liquidity traps, rug pulls, all of that stuff is part of it. And you can't do any of that stuff without technical analysis, because you'd have to have some kind of understanding of the way retail thinks. So it's always uncertain, right? That's I feel like a given. MPW, I'm going to talk about this. I know not everybody loves this stock. I get it. And I know that this is kind of one that I've been looking at myself. And some of you are like, I'm not really interested in real estate, Booksy, or medical properties, real estate and trust. And you tune out as soon as I start talking about it. I get it. But I need to talk about it because this is one of those things where it's kind of like a prime example of throwing retail under the bus and making it seem like this is really, really bearish. And what I'm noticing on this is that everything that we've seen right here has kind of played the long game. And just like we're talking about with these reaccumulation ranges, there's sort of a design in it that makes you think it's going to go ahead and run early. And then you find out it's like building a larger range out. And this is like a prime example of that. I had been talking about the possibility of this just racing back up. It did make a big advancement. It did. But in the end, when you look back on it, you're like, well, it kind of just built a bigger range. There's a auto reaction here early. There's a support that's right around 490. And then there's a phase B top at like 560s. What's left is what I think is a creek jump. And there's an outer creek that's pretty far away. And it looks like it could take a little bit to get there, right? It's way out here. It's from the top. The inner creek, though, is not. And the inner creek is kind of like right where it is right now. And this might be one of those things that's, I don't want to say it's going to work, because I don't know for a fact it's going to definitely work out. But to me, this looks like a heavy volume sell into a spring bottom. There's a lot of previous support here from a trend that goes way back, right? This is an uptrend. It's also coming down to the 4-hour 180. And I'm noticing that a lot of these analysts, they downgraded it based on it crossing the 1 hour. So when it came down and it crossed this 1 hour moving average at like 5, all of a sudden they were like downgrades from hold to sell or downgrades from buy to hold. It was all very like synchronized. So they were all like downgrading it based on this particular drop. And I'm looking at it like, well, isn't that kind of what you want if you're an institution? Because you would want people to be selling off, you know? So they're purposely dropping an EMA. It triggers all these sell-offs. It triggers all of these stop loss orders, right? And it literally has people from going to these analyst groups selling off. Naturally, I think anytime there's a dividend, you're going to have some kind of a sell-off potentially right after. It happens almost every time, and it makes sense because once you collect the dividend, then that's a good time to sell if you were waiting, right? So if you have a large position and you don't really want that position, you might wait for the dividend to hit your bank account, right? And then you would sell off perhaps a little bit. Well, they use that dividend, they gap the stock down beneath the 1 hour, it triggers all these selling signals, right? And now you can effectively drive the price back down to a low that previously was not there, like it was holding. And I'm looking at the RSI and I'm looking at all this stuff and I'm like, man, this would be one heck of a really good spring if it ends up being a spring, because so many people would have exited. Now you're looking at it probably like I'm looking at it too. You're thinking, well, couldn't that just be like a curtain rod drop? Yeah, it could. That's not out of the realm of possibility here. It's definitely not. And I think this I'm saying is a spring, but technically, like, could it go lower? Sure. You could have a terminal shakeout that drops to like 450 or something crazy fast and then rapidly comes back up. But I went back and I looked at it more carefully and I thought, well, am I going to be shaken out? Do I want to get out of this play? I don't know. You know, at first I'm like thinking about it. And I come back and I look and I see that this bottom at 485, they've bounced off this bottom, right? There's like a quick, hard reaction to the upside. Now it starts looking to me like that M cross, you know, like that shallow S curve. And I'm thinking, okay, well, all that's really required here is it pushes back up and makes a new high. And that's exactly what it does. It pushes back up here and makes a new high at 492. So it's either distributive or it's going to find a higher low and it's about to push out of this structure, right? Because remember, in the shallow S curve, if you're looking at it like a bottom, and I'm using this as kind of like a learning tool, right? So effectively what's happened is it came down, it had a massive upthrust. This looks kind of random, but what it does is it pushes this creek way out to the side. And notice that that's right where we are right now. So by doing that, it creates a large amount of space. Think about like a rise versus run. So geometrics, right? By pushing this creek out farther, that's all that is. It's just a single wick out. By pushing that creek out farther, you now have an incredible amount of space to go sideways in a low area that you hadn't previously been before. You're either going to use this to distribute and sell way down, or you're going to use it to create a bottom, right? Then it comes back down and it just basically chops right here. This looks really similar to a cat ear diagram, right? And it looks really similar to these other ones we've been talking about recently because it has the vibe of that shallow S curve. Now you hit a low. Doesn't mean it's the lowest low you're going to hit, but now you've hit a low. And what you've done is effectively created a floor right at or near where the previous floor was. Okay, now you do have some lower hits that unfortunately, I should say unfortunately if you're bearish or bullish, they might need to be tested. And technically, you could kind of play around beneath this bottom anyways. But that's what a spring does. Like it's essentially breaking the lower resistance and causing panic, right? So efficient as it is, this is given like a really good opportunity because I think this would be like a hyper efficient spring option. And we've talked about these guys quite a bit. But basically like this is a possible breakout. If it can hold like a higher low, and I didn't draw it on here. There's technically like one more bottom right here. Yeah, no, I did draw it. It's there. If this can hold a higher low than this previous push, or just make support, then it's already pushed higher. This just then becomes a matter of continuation, and that's a highly effective spring bottom. So I'm not letting go because even though this looks bad, and you might say, yeah, man, it looks like it's about to drop off a cliff. This push high though it could be, again, it could be distributive, I know. If it's able to jump the creek here, it's not distributive at all, and it's very, very tight. So we're at kind of like a on the wire kind of moment for this. And then I went back and I did some other stuff, and I was like, well, let me measure out. Usually this wave on the auto reaction's about 50% across. And I checked it out, and I was like, yeah, it's there. It is there. And I went and looked, and I said, well, this is probably the lower wave that it's going to go to. And I've got it here. I'll highlight it in like, I don't know, like pink or something. I have no idea. That this is the wave. So if this is a spring, if it is a spring, then this is where essentially you're going. So in a Wyckoff setup, auto reaction, support, phase B top, drives the price low, shakes everybody out. You have created a bottom, right? All you have to do is jump this creek and it's going to fly. And I mean like in a good way. You're probably going to have like 20% move over the course of like a week or so. And then you're in an SOS range. And I checked it just to make sure. I thought, well, if it returned back there, is it efficient, right? Like, has it created another cross? And it is, because if you look at this marker, you kind of follow along. So what I'm doing is I'm dragging the measuring tool, and I'm using the middle intersection right here on this creek, because I always assume, I don't know if it's the right thing to assume, but it tends to be true. I always assume that they're going to use some middle support, and you see there's the center of the range, which in this case is like $21, or excuse me, $5.21, or they're going to use this downward creek, or both. You know, could be both. So I went and checked, and I looked at it, and I was like, all right, well, if you use both, where would it go? And sure enough, if you do the cross section where they both intersect here, that's that downward creek and the middle of the range. If you were to make a move basically into Friday or Monday and you got it above 522, you're halfway to this pink creek, which means that you're basically at a perfect 50-50. So what I'm trying to say is mechanically, and I think that's the best word to use perhaps, mechanically this isn't like a prime spot to have a wave. It's like everything measures out correctly. Like it's basically right where you would expect the final action to take place. This is kind of midway through the range. Mechanically, it's like perfect because you could have a perfect 50-50 swing, jump the creek, jump the midline at the same time. It's crazy, I know. Looks like it goes straight up. But if this spring test is successful, then I think this is well built. Okay, now, there's always risk in any trade, and the risk here is that this is what we call like a distributive action in terms of a curtain rod drop, as I call it. What that usually looks like is that you form low, like you're gonna spring, and then instead of springing, you get some kind of distributive action high, which did happen here, right? But then you make a new low, and that's kind of the key. Right? It's like you have this distributive action, but you don't make a higher low. Instead, you start dropping. So there's kind of like a hooking motion that's occurred, right? And then you essentially just drop down. Now, this could still be a spring up to a point. And I don't know what that point is because I don't use the point and figure stuff. Usually there's like a percentage. And it would be like, oh, well, this could be a spring up until like some previous support at like 450 or something. And then if it drops through that, it's not a spring anymore. But basically like that could still be a spring, but it also could just be like a distributive action. So I know you guys are like, well, that's not helpful. I know, right? Technically, as a spring goes, it could be done. And then technically as a spring goes, it could still have a nasty drop. And that doesn't really help. But the good news is that it doesn't really matter because in a spring action, you would come back above 485. So if you were like stopped out because it dropped beneath the new low here, if it dropped beneath 472, and you were like crap, and you stop out of your calls or whatever, and then the next day it rockets back up and it finds support above 485, then you know you just missed the spring action and it's perfectly fine. Like you really are not losing much of anything. Volatility is not going to change that dramatically. It's going to hike a little bit. But then as it rockets all the way up, people become more and more convinced that they were just trapped. Shorts especially will start becoming more convinced that crap, that was actually really was a head fake, and it goes the other way. So what I'm saying is not that this is inevitable, but what I'm saying is that this setup right now looks super clean to me. Like it's almost perfect, okay? And if I were going to advocate for another move down, I probably wouldn't advocate for a new low at this point because it already pushed up high. So I don't want it to necessarily drop down again. That's not what I'm saying. But I'm saying that like at this point, it's set up really, really well from the current bottom, that 470 area. It's set up really, really well to bring you right back up to an SOS at like 575. And that's a big move. And if you're wondering like, what do I think, how this plays in with everything with AMC and all that jazz? Well, I can't tell you for sure that this is going to be exactly 1-to-1 or something like that. But, you know, just like AMC and GME, if it has that move over the next week or so, and it happens to make that move, I think you're going to get a back up to the creek probably, and then come back to an SOS, and then probably at that point you're just taking off. You know, and this could take a while and make it look like it's instantaneous, but really, an SOS can do this, be kind of healthy, and then come back down, and then go way back to the creek, and then take off after like an LPS or something, right? Come back low and then take off again. So there's a number of things that could happen. And that could be, again, built into this kind of idea that maybe we build out a exit into July. And then I think it's the same story. I think that you're looking at AMC and GME. They're both making a new high. I think it just kind of looks like a secondary upward motion, kind of like this one. So you get another big push up. And then probably at that point, it's done for a bit. You know, I don't think this is going to rocket or moonshot, but I'd have to look because there's a super macro creek on this guy and this massive widening downward. And I think it's that red line. Yeah. So if it were to jump that red line, I'd be like, woo, that's spicy, you know, that looking good. Because then you could see how, oh, if it jumps that and holds above 640, you're in a really strong position to make a new push again. You know what I mean? Something like that. And then I think it comes back down for October. We already talked about that a little bit, but that's a whole nother story. So my point is that is this positioned in a way that I think it could make some significant moves to the upside? Yeah. Does it mean it's going to definitely make significant moves to the upside? No. But, you know, all the same, if we're watching something and you think it's bad, you have to ask yourself, like, well, is it bad? I know that seems like a silly thing to say in the market. I always feel like you should second guess it, though, because especially in the case of, like, this one, yeah, this looks like a cat ear kind of top. It looks like it could just drop. I'm not saying it can't. But the reason those guys were, like, downgrading it was because of the hourly cross. They didn't have any other indication. They just thought that that was a buy signal when it jumped above. And by the way, they didn't call for buy signals down here. You know what I mean? They called for buy signals when it was already above the moving average, which is fine. That's one way to trade. But they were very much like in the case of MPW, like all of these analyst sites and stuff, like they weren't calling for these signals. Most of them were like neutral or hold. And then specifically this daily, right? This daily signal. I forgot about this one too. I looked at this yesterday. This is another one. They were like, buy it, right? Buy it. It jumped over the daily. And then it's already like, the move is like half done and you're buying it into a top. And then sell it, right? Oh, you're in a bottom. Buy it. You're in a top. It's like, sell it. You're in a bottom again. I mean, isn't that crazy? That's the way those signals work. So like, be careful, like pay attention to where they're calling them out. I mean, literally in this case, they're calling for buys when this thing is like topping off lately, which is insane to me. And I'm looking at it like, well, I'm not saying you should always play against the curve here. That's not smart. You don't always want to try to catch a bottom and stuff. But frankly, like, again, as a range goes, like, this could be really healthy. That's all I'm saying. It could be fine. But those analyst groups are just they're not looking at all these stocks like in high detail, because the same analyst groups will tell you like this is highly undervalued, but then they're telling you to sell it here because it drops back beneath 520, and they're like, oh, you better sell it now. It's a sell. You don't want to hold it. It's not holding that support. And you're like, okay, well, maybe it's just consolidating and it's going down for a liquidity chest, and this is a big stop loss hunt, you know what I mean, to drive the price low. I don't know, maybe. I'm not saying it is what it is, but it's kind of the vibe I'm getting. I'm shrugging my shoulders over here. There you go, I said it. If you guys are playing your drinking game this morning or wherever you are. All right, so I wouldn't say this is unfortunate. I don't think it's unfortunate. This is fine. So like a lot of times in this bottoming action, you end up making a push on AMC. You end up making a push above this drop. It's not super unusual. Like in some circumstances, I would look at it and say, no, that's not good. But in this case, all that's really happened here is you made a bottom, and then it made a little M cross locally, and then it jumped another creek, and it made a new high. So like most times, you're just going to watch and see if it holds like a high or low when it comes back down. I still think it's probably going to come back down. Some of you guys are like, no, it's going to go, man. It's just going to race up. I don't know. You know, these things, first of all, it's micro. It's not like the biggest time frame. Second, the breaking of the trend already happened. So I guess if it did go back up, I wouldn't be like upset. It's just kind of like, all right, well, it already broke through this bottom. So if it jumps back up, it jumps back up. That's still a cross in my book. It's just happening fast. But mostly I would just be saying like, all right, is this pretty normal? Yeah, I think so. You know, pushing back up and then dropping low. I don't know. This kind of dropped low first, but maybe we're in just like this first push up or something. Who knows? This is like the previous one that happened, and it's got that quadruple flush motion, and then it's got the little micro spring. So I'm just showing you a side-by-side so you can see it. So this was basically like an LPSY, like a last point of supply. It just kind of sat there and chopped. Bear flag. We had a couple of those. We could argue that these both were kind of like that. I think it's too small, but whatever. You know, so it doesn't really matter what happened on the bottom here as much as whether or not we have that kind of continued support high for now. That's in contrast to what happens in a distribution, because in a distribution, you do not want to make these, you know, this is the same deal. You've got the LSPY and then it drops down again. And then you're making these up thrusts, but you're basically barely spending any time in the tops, and you're falsely going across. So you're like pushing over, dropping back, pushing over, dropping back. You don't want that. And even this, it's like fake out. It looks like it finds support at the last minute, but it's not accumulative. Like the range itself is distributive. So this ends up just being a giant up thrust. So we don't want to see something like this occur on AMC. It's at $5 it's gonna run. Maybe. There's some interesting stuff on the 15-minute here. You've got these kind of, it's like these, you can kind of see them, I guess, visually, like these chops to the upside. And they're kind of shrinking down, almost like a wedge pattern here. And then if that were the case, you might expect there to be a big retracement if it breaks out back to 519. And I don't know, you're starting to see that on RSI. It looks like it's divergent quite a bit at this point. It's really been very flat, just kind of chopping up as the price comes down. So what would 519 do? That's a whole nother thing. I don't want to do it until we get there, but I wouldn't want to mess with it. But I think that that's okay. Like yesterday we talked about a hyper bullish scenario of it coming up and like coming above and just kind of staying. I would rather do this, but kind of hold support or just go, you know. But I still want to see support on 494 even if it came back up. So that's about as good as I could do it for you for there. And it is an M cross. It's like 1, 2, and then go. It's just happening like really vertically, fast paced. Yeah, I could see that. Maybe that's how you can get to a phase B top. I don't know if that's my preferred method. I'd still rather us kind of chop low first and go ahead and get that out of the way. And get this out of the way. But if this ends up being like this kind of long range, like GME, if it ends up being this like longer range, it could be that a lot of the stuff that happens down here doesn't even really, I'm going to say it doesn't matter, but it could be that it gets left out and then we don't have to worry about it later unless it's left out. So if they don't do any checks and then we come back later, you'd be like, okay, we have to do all those checks now. If they do all the checks, then when we come back later, we might just skip this area, right? If we're doing a spring, we'll just boop and then down, or just stay above it in LPS. So GME looks a little bit more like kind of what we were expecting, just some more downward action, one more push up that's sort of distributive locally, and then drop. It might even go to this guy. We haven't tested that yet, so something like that, and then come back down. That would be better longer term, I think. Go ahead and do it the right way. And then yeah, maybe, I'm not sure with IWM today, but I can't really tell. I should go to like a smaller time frame just to check. It looks like it came back here, so kind of. It kind of looks like it did the back test here on the jump across the trend. That doesn't even look right, does it? Why does that look like that? Looks way wrong. What? That can't be right. Did I do it on extended hours? Nope. Why is my line like that? Oh, because that's right. I didn't have a line there. I just redrew it earlier. All right, I was just eyeballing it. Never mind. You guys are like, what? That was like, I drew it on like the 4 hour or something. No, I don't think this checked it at all. I think it just jumped over. Sorry. It doesn't look like it checked it at all. I don't see any kind of a backwards test here. I think we might even double bottom because it's so low. At this point, why are they doing this? This is silly. So you have to come back and check it. Is there another creek here? I think you do. I think you need to come back. I don't know why you wouldn't. It seems odd. Maybe if it's it was a bear trap, then they may not want to come back, but to me it looks like you'd come back down and like double bottom almost, just to come back and check this break. You did find some support here. You can see the heavy volume push right there, so your perceived creek might not actually be that line. Not like I drew it really tight, like as a trend would be drawn. Like right here, looking at these two peaks. That was from FOMC day. I got rid of it for whatever reason, but really like once it finds a little bit of support here, you can kind of imagine it, again, lifting it a bit. And so we might kind of cut between the two, and it's like there. Yeah, I don't know. To me, it looks like it needs to come back down. This is like an auto reaction, and you're going to form out like a real range. So probably more like that. But there is a gap, so I guess it doesn't really matter. They could fill the gap first. It doesn't make any difference to me. So, because I think that as a range goes, like, this is your bottom, this is your auto reaction, then we'll see what happens. It has to find support after that. Could be a really deep retracement, and then going into Friday, maybe you're kind of coming back up, and then Monday you're building out here. Support. I don't know if you're going to come back down repeatedly. I think for whatever it's worth, I feel like there's a need to kind of trap bears. Something about this move that really bothered me was the puts. So somebody had like 190 puts, and it doesn't seem like it was part of the plan. And I know it seems odd because max pain kept shifting, and it was really high. It was up here around 204, and it kept shifting around. It went down to like 203. But I noticed that those positions on the puts, maybe they were exercising them, which doesn't really make a lot of sense, but to do it at a loss. But like, it seemed like there was a huge amount of open interest. I'm talking about like massive amounts of open interest, like 40,000 contracts per 50-cent range down here. And all of this felt like a big drive down, and it looked like somebody got caught with their pants down, frankly. Like, they were just not prepared for that massive gap up, maybe because of the news. And I don't know. Could it have been part of the plan to instigate a sell-off here? Yeah, but I'm not sure if the idea was they were going to take it this high. I could be wrong. You know, we were just talking about how, like, somebody always knows, Booksy. Yeah, I agree. Somebody always knows. So we might even find support at 198.40. That makes sense to me. This previous bottom. This is where I'm at. You don't have to be with me on this. You might think it's going to break down and it's a hook and yada, yada, yada. I don't think so. I think it's a bear trap. I think the news wasn't that bad. Everybody's making it sound really bad. Come on, AMC, don't do it. Just chill, dude. AMC needs to, like, relax. I really don't want it to advance too fast, too soon. But I guess we'll find out what happens. I want it to kind of just chill out for a bit, come back down. I know, that sounds bearish, but it's not. It's bullish. If you think that's bearish, we need to talk for a bit more. It's not about the creek. Like, I know I want to jump the creek at some point. That needs to happen. I don't want to repeatedly up thrust through the creek and sell off. That's not the point either. I want there to be a gentle kind of crossing of the creek and then have that support. Not gentle in the way that it could have a run. I'm not saying it can't have a run, but I'm saying, like, I don't want it to just like erupt and just keep going here. There's too much stuff that needs to be checked out. And unlike what happened in May, I don't really want to see that. I know you guys are like, I want to see it. I want to see it rip 100% every day after hours. I don't like not having the ability to trade it, and I don't like not seeing the checks. So you're their liquidity. The shakeout, in the terms of liquidity, when we talk about going low for a spring, when we say what's a liquidity grab in a spring, it's putting on sellers. So you have to understand, like, it just depends on the context, right? Because in an LSPY, it's kind of the opposite. If you think about it, they're the same motion. Both of them are driving beneath a support. And then they're two different things. So like a spring, so for example, this is an LSPY. I think this is a really good point. You may have been joking about it, but I think it's a good point. Because in an LSPY, the point is to shake out who? Well, it shakes out some sellers because as the price rises, the sellers start covering a little bit. And it's an opportunity then to take on more of their positions, make more shares available, take more of their positions. Short operators don't like other shorts per se. They use them. Okay, so you have to understand that. Like they're using retail shorts just like they're using retail bulls. Like they don't care. Shorts and longs, doesn't matter. Okay, it's part of the game. So it's an opportunity for them to load up positions. Yes, there's buyers buying in, think it's turning around. That gives them an opportunity to sell more shares, right? And without moving the price down. That's the key, right? So as buyers think they think, oh, it's going to turn around, right? It's hitting support. We're going to just rock it back up. Well, it allows them to pin it because if you have people buying it, then you can short sell it without driving the price lower. So you can accumulate shorts basically in these flagging motions, all right? And at the end of the day, shorts win. Stop losses are triggered, right? Selling happens because people thought it was going to run. It's not. And without a whole lot of effort, you've gotten these short positions down another 2 or 3%, because of the liquidity grab, meaning you're taking away positions from other shorts and you're allowing buyers to buy while you go ahead and short sell and load up your position again. And you might take some profit off the table. It's a very meticulous process. I don't think a human being could do it very easily in this day and age because of the amount of back and forth you'd have to do. And that's why we see those pings, right? They're kind of matching trades. They're not trying to advance it too quickly in an LSPY. How's that different from a spring action then, right? Because wouldn't a spring action be the same thing? No. So a spring action is the opposite. So in a spring action, you might start covering some of your short positions for sure, but you'd mostly be buying in. And what you'd be doing is you'd be taking advantage of the fact that you broke some kind of major support. In this case, you're breaking a low. Now, could this be just a hook that still goes lower? Yeah, I mean, technically we didn't come down to 469 or whatever. There's definitely a possibility. We're not even really at the low yet. But if it were a spring action, the liquidity that you're grabbing is now you've got panicky buyers, right, who are like, crap, it broke my support. They're selling, so you can buy their shares and take their shares away. You've got shorts that are loading up thinking, great, it's another LSPY, time to drive the price back down. It's going to go down. It broke the major support. It's going down. All of those guys or those algorithmic dudes are like, hey, it's a sell signal now, so we're going to sell it. Well, that is essentially the reverse of what an LSPY is. It's a completely different liquidity grab. So now you're buying shares, you're not selling them as an operator, and you're doing it very quietly. Again, it looks like a breakdown. And then suddenly the price action reverses, all of the shorts are basically stopped out and they're screwed. And buyers are left wondering what happened, if they happen to be in there, or they happen to sell off because of most of the time they're happen to sell off, right? Because the retail's like, oh, it's down, it's underneath the support, it's over. So they sell off, and then you're like, what happened? It reversed. And that's why when you see an exit of a spring, what you want to see is you want to see a low volume buyout because people aren't convinced that it's going up. They think that it's a fake out. They're not convinced it's going to return back to the surface. So the best springs, they have these drops. They have these very kind of heavy selling drops because it's triggering a bunch of stop losses and stuff. I'm not really seeing anything like that here that's super heavy, but maybe this guy, but it's pretty weak. And then you're basically what? Again, buyers are getting stopped out. Everybody's like, it's going to go down. And then you get this weird reversal that doesn't really have that much volume. Everybody still thinks it's not going to work out. And then all of a sudden, when it makes support, you get an actual buy-in. And that's where you get the heavier volume. And then people still don't know what to expect. But you start the markup phase, and this is where you should see LPSs, right? And at this point, the shorts are in trouble. All the short positions from the phase B are being eradicated because they've been stuck. That's the difference in the liquidity grab between a spring and a not spring, right? And an LSPY. So if you say something like you're the liquidity, and you're thinking that and I don't know what exactly you were referring to, Yeah, exactly. That's true. You're playing right into institutional hands because in the case of these analytical groups, they're not. I don't personally think they're doing anything. I think all it is it's a signal, and they upgrade and downgrade based on that signal, and that's it. I don't really think most of those groups, and so they post news onto your little news feed. I don't think most of those groups give a lick. I don't think they even hold positions necessarily. They're just posting it, and your Fidelity or whoever is just grabbing those and trying to feed you those. So it may not seem like there's a lot of ill intent there, but yes, you're right. It's like they're basically you're buying in on a top because of a buy signal, and they're selling because they're getting ready to take the price back down, and then potentially vice versa. Now, that's where the challenge comes in, right? Because, and that's the learning that you have, unfortunately, the hard learning, in my case sometimes. The hard learning is that if you misidentify a spring and it's not right, then you're actually playing into their hands the opposite way. You're doing the LSPY buy-in thinking that it's a spring, and it's really not a spring. So you got to be really careful about, this is the challenge of any trading methodology, by the way, has these challenges, okay? So it's not just, oh, Wyckoff's too like psychological, I don't like it. It's too psychological, I can't understand that. Well, everything's psychological in the market. Like if it breaks a moving average, it's psychological. And if you buy in because it broke a moving average, you might get a really good trade. But then what if it rockets back down and now you're below where you bought in? All of a sudden you're now in a psychological position where you're deciding what you want to do. I mean, and there's times like in this case, I'm on the 15 minute. It's not the best one, but there's times where it's just chopping through like a moving average. So if I'm just trading moving averages, there's always going to be parts of that are psychological in nature because you're not really, you have to make split second decisions about whether you think a hold is a hold versus like, a breakdown. Hang on just a second. I'm gonna talk to my wife. All right, thank you for your patience. Yeah, it's like when Kramer says to buy Netflix at the top. Yep. Well, it's not like they're not wrong sometimes. I mean, you have you buy the trend, right? So that concept isn't, it's not like that's some kind of an evil. It's not like they're always manipulating people. I really don't believe that. I think genuinely he's just kind of doing the age old, like, hey, just the trend is your friend. And if you're in a bullish position, you buy the trend and then you're good, Those are things that are pretty typical. I mean, I don't feel like there's anything wrong with that. per se. It's just that when you're analyzing a range, you have to keep that in mind. Does that make sense? So I don't think that those little notifications that I get through Fidelity or whatever, I don't think they're trying to manipulate me. Like, I think they are aware that people get these signals, but I don't think the people that make the signals, these analyst groups, I don't think they care. I think they just are doing it, based on where it is, where the price is versus these buy and sell signals. So they're not the ones manipulating it. They're not the ones running it. They're just reading you signals. You know what I mean? That's the difference between an operator and just like a normal little analyst group or something. Think about them like pawns. Like they're just there like middlemen telling you the news, what they think, and then the people that are actually operating it are actually the ones doing the manipulating. They're using the news. You might say, well, I think they control the news. They control those places. Some of them do. I mean, some of these analyst groups, you got to look into them. They are kind of subsidiaries. They're owned by certain corporations and stuff. But like certain Citadel Securities or something, you know what I mean? Like, you can check them. Most of them aren't, though. They're just kind of their own thing. And they make money based on hits and all this stuff. They make money based on people clicking and looking at their website. And so they're just trying to drive traffic and get people on board to sign up with their analyst program. And it's a completely different motive. Yeah, I don't know. This is a bizarre little bit of price action. I think a lot of it's because of this. I think we're seeing a kind of a sustained kind of buying effort because of this. I don't know if this is enough. I feel like it's not enough. So I'm still going to just kind of sit here and say, like, I feel like we might make this push, but I feel like we're at the same time, I know I say feeling, like feeling matters, but I still suspect that we're going to see a retracement back down this week. And if I'm wrong, I'm wrong, but we've traded this a bit in this little pocket. You see these repeated trades right here. So there's already been a lot that's happened. And actually it kind of looks like I'm mirroring out, doesn't it? I didn't do that on purpose. This could be a gigantic even atom bottom. I just noticed. Because the Eve and atom bottom has like a massive thrashing. And then once it comes back above this top, it's broken out. This could be an even atom bottom. I'm trying to remember the rules for that. I'm going to look it up really quick. I don't want an even atom double bottom. Oh yeah, it is. It's like an even atom bottom. Percentage meeting price target 72% out of 759 perfect trades. That's a lot. 72% is really high. Confirmation as a true double bottom once the price closes above the peak between the two valleys. That is the top red line on the figure to the right. So this is Valley 1, this is Valley 2, that's the peak. So it's way up here. That's a long-standing confirmation, but sometimes it's basically a W. Sometimes there's a handle, so you go sideways here. So what's the measure rule for this? Compute the height from the highest peak A to the lowest valley B in the pattern, and then multiply it by the above preceding and add it to the breakout price, the highest peak in the pattern. Ooh. Well, technically this is a valley that went lower. What happens if Adam comes lower than Eve? Is that bad? Maybe it doesn't matter. $9. Is that almost perfectly like $10? Wait. That says 987. I think it's 987. So I'm going to do that. That's cool. Let's take a look. So we want 987 times 72%. So $7 and we'll just say $7.10. Could be $7.11. 7.11. $7.10 from the top. Here, I'll lock it in. $214.37. So that's your breakout target if this bottoms. All right. Show off. Booksy, you're such a show off. You dummy. I bet this comes back down and checks that bottom too. Yeah. All right, dude. It's so funny. Oh, man. If you missed what happened, all I'm giggling about is the fact that I managed to draw it like perfectly. I don't pretend to be perfect on it, but it just so happened. It's just like, well, that's where the SOS should be, right? Because it's like right over above this previous one, and then this red line, I think we're hooking around it. So I was imagining it would be like a 50-50 across here, maybe. So that could last for a while. This could be like a long buy-in. Yeah. Maybe it doesn't move till August. That'd be crazy. This move would be a big move, though, to 214. Dude, that's so funny. Cracks me up. Good job, Booksy. All right, let's check this level at 214.37. Do I think 214.37 makes sense as a liquidity test? Yes. There was definitely at least 1 to 2 to 3 hits on it previously. Actually, it makes perfect sense because if you go back and you look at where that SOS is, what is that? This is I can't, oh man, that's a ray. What value is that? 207.26. I don't know why I did that. I should have just done horizontals. This actually makes perfect sense because if you look at where that is, it's right in the, oh man. Gosh, that's pretty, man. Holy moly. Look at that. That's like perfect. That's right where you'd want it to be. And then it just jumps right up to above 230 probably. Right there. Right where that hook was, whatever that is. I don't know what number that is. Let's check it out. $220, let's see. 227.13. It's a weird number. 227.13. That's the number though. I don't think you do anything here. I think you just rip right through it. This is all going to be skipped. If it makes the SOS, it's in the perfect spot, you guys. Like, that is perfect. That's a Volkowski target for that kind of a bottom right here. It's not rocking you to the moon. It's just getting you back up above the creek, which we already knew needed to be right there. It's a perfect jump over everything. It's a local SOS, move above the creek. I mean, it's just great. It's a wrap on the trajectory. And then even more so, it's the previous, it's exactly where you had the buy-in before the previous range. It's the space between the two, like right underneath. So it's basically like the previous, I don't know how to describe it, but it's your supply demand zone from January 2021. So and I really think it's actually support. I really could just call it support because it starts acting as support. I spelled trajectory with a G instead of a J. It's really all the way up until for that whole year. It's beautiful. Killer, man. That's a killer. Oh, I forgot. And it's a Volkowski target. That's just beautiful. Can't beat that. That's a lot of data. What else is there? Let's see what else there is. I mean, we know it's a liquidity shelf. That's kind of a given. What about EMAs? Nothing. Nothing on the 180. On the 4 hour. What about the daily? Nope. It'd just be a retest of the daily. Going back up. What about the weekly? Weekly's way down there. What about the monthly? Monthly would probably be really low too. I don't even see it. Yeah, it's way down here. Y'all are like, it's going to the monthly, Booksy. I don't know. There's nothing else there. Maybe there's some kind of fib level, but I mean, it looks really clean to me. Timing is difficult, and there's not really any sense of timing with this. I would say like basic stuff like in and out trajectory seems likely. I don't know. That's a hard one because like with an even atom bottom, your exit often is really fast up until the top here, and then you have a consolidation. Is that also like a 50-50 move? Pretty darn close. It's a 50-50 move over the high liquidity. So it's a good swing for an S curve. That's a lot of stuff. What about this guy? Because that's another thing I can do. Oh, sorry. I can't help myself. I just have to try it. What do we call this? It's really like a, I don't know what to call them except tangents, because I don't know what else you'd call it. It's, or a cross, because I'll just call it a cross. since we've been using that more often. Yeah, that's perfect, dude. It's a perfect wave cross. So it's a perfect 50-50 around here. I don't know. We can keep trying to debunk it, I guess. I'm going to guess that this is going to support that as well. Yeah, probably. So this is just one part of the move. It's not like the whole move. But yeah, there it is. So if you look at it on the RSI, you can see the hits that are made are gearing up for the same level. I don't want to fudge it, so I'm going to try my best. I'm going to use that top point. Not using a 50-50 here. It probably would be a little higher. Just using these resistances, so not quite exactly the same, is it? But really darn close. That one's a little off. Kind of makes it seem like you'd hit this mark, but you wouldn't be overbought anyways. It'd be something like this, where you'd start chopping right here, potentially. And I don't even know if this is where it starts. That's the other thing. What about this guy? So I did this move for the bigger S-curve, right? This giant one over here. But for the smaller one, maybe we use this. And that works. Yep. Okay, that's my PT for it's a triangulation target for IWM. I think we're going to hit 214 by around July 11th, I guess. Explain what you just found? I mean, I just went through it all. You want me to explain it all again? I don't need to know every single thing about the market to know that this is a probable bull target. So I don't know if it's going to hit or not. That's not really a guarantee, but it's definitely a target, 100%, I believe. So what I just found is a reactive move on IWM. This is what's called an even atom bottom. You set up a liquidity zone, you go sideways for a while, and then you create essentially like a whipsaw around that liquidity. And so you have a massive move up and then back down, and that drives to a low for like a spring, essentially. And then when you build out, if you have confirmation, and confirmation, by the way, on that Bolkowski target, it's not until 207. So it's quite a ways off. Not surprisingly, it's basically where you would jump over like the other creek, which are the two tops right here from March 28th and May 16th. So it'd be around that same area that you'd find some kind of a support here at 207. So what I did is I used a Bolkowski target to determine what that advancement would be, and that advancement gets you to 214.37. That was kind of what I was thinking about anyways, because that's where you need to come into an SOS zone with this range that you're currently looking at, which goes from roughly January of this year to now. So it's a really long range. It's a 6-month sideways period. That 6-month sideways period is a potential SOS on a macro push. So it's a sign of strength. We didn't know if we were going to need a bigger backup. We might still need a bigger backup. I don't know. If the bigger backup happens, you could come pretty low. You come back down to like 180s. But if it doesn't need it and we've got enough liquidity, then we're going to SOS locally in the SOS. So you'd have a sign of strength within the sign of strength. What I just measured was that if that bottom plays out, that Bolkowski target will get you to the SOS. It just so happens that SOS range, if you look at that and then you look at where the backup would be to where that peak was, which is at the liquidity shelf, but that's where the backup goes. It's a perfect jump over the long-standing downward creek that this SOS caused, which goes from the all-time high to now. In addition to that, it would be an efficient retest. Okay. So in addition to that, where that retest is at that 207 mark, I went back in time and I looked back to see, okay, where's the peak here at 214 and where's the low at 207? And if you go back, this is the historic spot where you entered the range back in 2021. It's basically the place where you'd want to find support before trying to jump through this range in an upward motion, because we've already been in a 1.5 year long backup. I don't really see why we would need to, at this point, back up even more, although there's plenty of bears out there that say that, yeah, we're going to have a market crash and that's what's going to happen. I can't argue with that because I don't know if it's going to happen or not, but I can say that this is where you would re-enter the range. You'd need to find support at 207. So it just so happens that this Bulkowski target that we were just given very neatly on IWM is set up to give you an SOS locally, which gives you a finishing of the SOS on the macro, which essentially indicates that you're probably going to exit this at a 50-50 range from this bottom to this top, which gets you all the way up to 252 on IWM, which is above the all-time highs. It bypasses most of the range that you've already explored, which is totally normal. And essentially what you're getting at this point is then you're getting a new all-time high, you're getting a jump over the major creek, and then what's even cooler about this is at that point, if you were to come back down to 227, you could have sell-off. You could easily sell down. Really, you could sell all the way back to 214. And this should look very familiar to people because this essentially looks like a gigantic cat ear, and one of two things can happen. You can either hold that support above the creek cross, in which case you're going to then bullishly continue into the future. Even if it goes sideways for another 6 months, you could have continuation. So it could be sideways and down. So you could have your SPY sell off if you wanted it, and you could still continue forward. But why that's exciting to me is because long term, that has a massive amount of potential for continuation. If you have this kind of a topping action, you have a low buy-in, and then it jumps the creek and holds the creek. Again, this should look very, very familiar to anybody who's been following this channel, because this is essentially just a gigantic creek cross, right, waveform signal that then gets you to new highs. And I personally think that even though you might expect like, hey, it's just going to run to the moon, IWM tends to be a lot more subdued and realistic and a little bit behind the market. So in some ways, and like the bigger market, so in some ways, I think the longer term approach here is probably better. And I think if you buy back down towards those 2021 lows, the 214 mark, you're probably going to see it take off after that. You would have this kind of top off and then come back down. Again, it could be a long time, and then potentially you could just take off. And then I think you're going to head to like 340 or something. There's really no reason you wouldn't, you know. So essentially this could be like a 1, 2, 3, 4, 5, or if you want to look at it as something like that, you can. I would just look at it as a potential for a massive market-wide up move over the course of the next year. And I'm excited about it because I'm in IWM calls. So naturally, like if it's bullish, this is a really perfect bullish setup. So here's all the stuff I just found, like listed out on the screen. So this particular setup, from a technical standpoint, it doesn't have to happen. There is no like compulsory technical move in the market, but high probability moves have a lot of congruence. There's a lot of different things that come together to make that move happen. And this is a lot of different things to me. So I'm not saying it can't make a new low and have a completely different setup. If this setup doesn't work out, there could be another one built out lower at like 190. We could have a sell-off that goes down to 180, and it could be like a spring. This range left a lot of possibility. It didn't do anything bad. Like it didn't really do anything distributive here. It's just kind of chilling out right along the SOS. An SOS can have a backup. When there's not enough buyers to push it forward, it backs up, gets more buy-in. It happens. But as an SOS goes, there's nothing wrong with this right now. So the fact that we have a setup that gives you a really clean exit going into July, and then potentially, and I don't know exactly when this hits, but potentially into August coming back up again, That should bode very well for people that are looking for a July push for GME and AMC. That should make you feel very good. So what I just found isn't really like, it's just there. Like I didn't really find it. It just kind of, I already sort of thought that was probably what was going to happen. So this was just a drawing from earlier. And I was just being really silly and egotistical when I said, oh boy, you know, because it happened to be like the same mark that I drew up earlier today, which just confirms to me that on a big picture, this has like some strong congruent action. Like there's a lot going into this action that is making sense from a bull point of view. There's always the chance of a rug pull, but the main argument that I'm hearing is for SPY is like it's overstrung and this volume's low. IWM's not really like that. Like the Russell 2K doesn't really seem to have that problem. The other thing I'm hearing is like, oh, well, as soon as we start rate cuts, there's going to be a big rug pull. Well, maybe that rug pull does happen in September. Maybe that's when those rate cuts come in. And maybe we're already up here and this is the long game that's being played. You know what I mean? And that's why we're going to set up that way going into October or something, right? Like, I don't know. What I do know is that the overall setup here doesn't seem to have any real reason, in my opinion, to have a massive sell-off right this second, which is what some folks are saying. They're saying that because SPY is going to have a rug pull, the market's going to rug pull. I don't know, man. I don't see it here. I just don't. I would be more inclined to say that if we had pushed up fast after FOMC and ran up to like 213 and then sold all the way back down in one day, I'd be like, crap, we're done. You know what I mean? There's really nothing about this that made me feel like it had to be down. And even that downward action, I just kind of held my longer calls and I was like, well, I'm just going to average down because I don't see anything here that's making me shaking my boots. It just looks like fear. This sell-off. And that silly, ridiculous 190 strike, 195 strike that somebody had a ton of open interest on. So is this a guarantee in the market? No. But does this setup absolutely work from a technical standpoint? And does it check all these other boxes? Yeah, pretty darn well. I mean, that's all I can say. Like, I'm not saying it can go. I can't say that. I don't know. It could easily change direction and something could happen and we could get a rug pull. But all I can tell you is that from where I'm standing right now, we don't know when this happens. Again, it could be a little bit later. This is a double bottom, so I imagine it'd be somewhat similar to the first. You know, you'd have some kind of a similar action. And I think if we're going to have a delay, it might be kind of like right here. Like you might have a little bit of a longer sideways coming back down to 201 because you need to make sure that checks the support, that high liquidity shelf at 202 rather. That may take a little minute, but this isn't like an instant move. I'm not saying it like rockets here tomorrow. I'm saying like, what, 3 weeks? July 9th, that's like a little while. So I'm not advocating that this is just moonshotting. I'm saying that it looks positioned to build out on a wave right back up to where it needs to be. That happens to be a really nice target. Really, really nice. Like, I could not have made this any better. You know what I mean? It just, nothing about this is bad. So all bulls need is the go ahead with volume and they're going to get there. Like easy. It's too perfect. You guys are like, it's too perfect. It's not going to work, Booksy. Well, I don't know. All I know is that's a really good target. So if you're in the game to make some money, like, that's a good move. I couldn't tell you anything better personally. Like I can't do any better than that. You know, and I was mentioning like down isn't impossible. Like we could be wrong about some of this. Like this could still have more downside, and this could be a longer Adam and Eve, or even Adam bottom, where you have like a deeper move. You know, and then it comes up, and then I'd have to remeasure, and this might change a little bit. But as it stands, it's fine. I don't feel there's a need. I think these patterns are based on previous examples where you have enough liquidity to make those moves happen. Like, that's the result of the move. If it's statistically likely, this is a 72% hit. That's a high probability, y'all. That's really high. If you go look at Bulkowski stuff, they don't get much better than that. Like, I'm not saying that 30% can't happen. It can happen where it misses, because 28% of the time it might miss, right? But like, that's really high. Like, his out of 759 trades, he's done it 759 different times. He's looked at these examples and they worked out. So like, that's a high probability. It's worked out 75% of the time. I mean, 72% of the time. That's very, very good. Now, here's the thing though, right? Is that the trade that Bulkowski's talking about is from 207 to 214. He's not talking about from the bottom. So in order for you to understand like that percentage meeting target, you'd have to understand like confirmation. So the Bulkowski thing is great because as it stands, that setup is really clean if you can get up to 207 and make the breakout. But that's the contingency, right? So like, some people are going to look at that and say, well, that's too far. Like, it's already like half the move is over. Well, yeah, it is. But then that's how the bottoms are defined. Like, they're not defined by a few little bars down bottom, on the daily. Like, you have bigger moves. So it's a risk-on proposal to say like, oh, if you get in now, you can make X percent. Well, you could. It's not confirmed yet. And I think it makes sense because if you look at this, the nature of this, it's basically like a gigantic, I mean, there's a flat top right here at 207. You can see it. It's just a breakout. So like I said, it kind of jumps like this little mini creek here. That's these two tops, this little pocket. So it makes sense that most people would look at it and say, oh, that's the breakout. And then you'd have some kind of and I don't know about the rest of this, how fast it goes. But you'd have confirmation here. And again, that makes sense to me as well. So it's like an additional, I mean, it's right where this red line, by the way, is a long-term waveform line. And it's sort of defining like some of this motion. I went back and looked at this guy, and it's essentially like the motion of the wave is kind of grappling on it. And it started here. This is the reversal. So this push down into that lower spring action, we always have those hook lines, right? The cat ear lines, we talk about them, like the lower one is right here. So it's still following that out, and I would think it would follow it until it pushes away, and that's why I think the trajectory in here is going to be like the trajectory out as well from this line. You guys are like, man, you're crazy, Booksy. Yeah. Yes, I am. Crazy. Yeah, I don't know. Where does that happen? Could be way later, I guess. But I mean, there's things about it that I don't really care that much about. Like, I'm looking for like the first big move anyways, and then I'd probably re-enter. I'm not going to necessarily hold. If I had leaps, I'd want them to be for next year. And I do. I have some that are for like next year. I have some that are for August. So what would a bearish signal look like breaking 214? If the ear is formed at 252. Oh, I see what you're saying. Well, I mean, you wouldn't want to come back down beneath the previous range. So it wouldn't happen like, it really very unlikely with something this scale. We haven't seen it very much where you just suddenly like drop straight back down through. That's pretty unusual. The bearish signals would happen up here. It'd be like a fake advancement. You'd have some kind of a sign of weakness where it makes a bottom and then it breaks the bottom early and then it goes up high and you get some kind of a sign of weakness way up here. And it will distribute, but I think that at that point I would just be waiting for some kind of an LSPY here if I thought it was going to just be distributive. And more than likely, you would have like a second distribution. Like this wouldn't be some small thing. If it were going to be bearish, it would do it all again down here to get you below, back into the previous range. So that there's going to be some kind of a topping action for sure, in my opinion. And you never know what happens. Maybe the market just continues to rally. That happens quite often as well, where you don't really have some really deep retracement. But there should be some kind of a topping action. There should be some kind of a bottoming action. So if it continues, you'll see it do something kind of like we're seeing on the macro, but it'll be smaller. It'll build out a small range at the top, small range at the bottom. This forms out a giant range. Who knows? That could still distribute, later. It's just, that's where things get kind of crazy. You really would just play top, bottom, top, and then you play if it breaks out. But if it were to break down, like you're saying, this area down here would be some kind of a distribution. And my guess is it would probably distribute along like, I put 227 here, but that's the previous range. You'd have some kind of a distribution top around 227, and then you distribute again here. I don't know. You'd have to kind of wait and see what happens. It'd probably look like this. And then again, it would do it again like here. And then you'd break down, and then you'd have to watch like the most major creek possible way down here at like 200. So it'd be levels. So you have to remember that when I talk about Wyckoff, I specifically don't really care that much about the markup period. That's the buy-in, that's the move. That's what you want in terms of profit. That's where you want to take profit, or you want to see profit, but you get the most. But Wyckoff itself is just a series of ranges. So you're going to have something that might look like a distributive top here. That doesn't necessarily mean you're going to go down forever. You just wait until you find a bottom. And so if we found a bottom here and it's accumulative, then you're like, okay, we're going to head back up. There's not really like a one size fits all. And then on the whole, robot. Then on the whole, you're like, wait, how does this all play out as a range? And then you can look at it and you determine from there. Because like that happened on, for example, like it happened on IWM back here. Like this is a huge range, and these tops are very boring and like narrow. They're very, very small. They're not huge range. They're kind of quick in and out moves, but they give you pretty clear indication when they break down through like a trend, or if they break out with like a hooking action. In these cases, it's all this moving average stuff on the daily. You can kind of tell head and shoulders, These don't really all look like classic distributions to me. But the bottoms look like accumulations. Bottom, bottom, bottom. And then you have to again look at the whole range and say, okay, auto reaction, or phase B top, if this is the auto reaction, and then what happens after. It's pretty boring. It took a really long time. And I have no idea, because cycles are kind of another thing here. We'd have to go back and look at maybe how long these things took. One of the ways we were doing it on very, very small levels was using just simple stuff like boxes, which is kind of corny, but it does sort of work. It just the rough estimation of this length versus this length, that's just wave stuff. You're just kind of looking at, okay, well, like when did I enter this range? Maybe over here. When did I exit over here? When did I, these bottomings look pretty darn close to that. So we might do something similar if it re-enters the next range, which it hasn't done yet. We're just in an SOS, kind of a middle ground, right? And it's a big SOS, so like I'm wondering if it builds again, the creek is going to be a lot higher now because of this build out. But yeah, if it entered a new range, like you might expect it to take a while 2025, November of next year. That makes sense. I don't know. It's not like it's a year away from election, so maybe there's something that happens in this year, builds out, and then you make a decision. That's just an idea. So that's not really that scientific. It's just kind of a simple way of looking at it. And I mean, it makes some sense too from a wave perspective because there's wavelengths. When you're at something this scale, you might expect there to be a bit more consistency perhaps in terms of how long things take. So the downward move here looks pretty even to the upward move here. Looks pretty even to the downward move here. So the upward move, frankly, I mean, you can see it looks like it's peaking out right around the time we've got it peaking out in September, probably going into elections, November. I mean, it's very straightforward in some ways. It's not a lot of mystery, and it just looks like it's going into the elections. It's going to be up. So this to me looks right. And I feel like after that point, the downward move we were saying could last till what, November of the following year. This looks more like May. So another 6 months after that for a waveform. So it could be a lot longer winded. I mean, you could have this kind of come down and meander back down through levels for a while, or just be flat for a while. Maybe it builds out again higher up, and most of the range is like here, you know, and it looks like a gigantic cup and handle by the end of it, and everybody's like, whoa, cup and handle, baby. And they're finally right about it being a cup and handle because it's long term enough to possibly be one. So in that case, it never comes back beneath like the 50% mark, which is like 200, which sounds about right to me. So that would be like a bigger retracement back to the creek, and then recovers. And I mean, you never know. This is long term, and then it starts a new upward cycle, and then that upward cycle lasts, and it's actually a really good run. Cup and handle breakout's pretty easy. It's just the height of the bowl. So long-term cup and handle breakout here would be like 365. Perfect. 365, right? I don't know. This is all way off in the future. Who knows? And I'm just saying, like, we don't know exactly what the downward cycle has to be like. We just know that if it holds certain levels, it's probably decent. I'm going to be more of a creek guy here and less of a range guy, because I think that creeks tend to be a little more useful. Because we've seen on GME and AMC, sometimes these nosedive quite a bit. But if it's made a higher push here, and then it starts coming back down, it often returns back to kind of early liquidity. So even if it came pretty low, I wouldn't be like flipping out about it necessarily. So it could happen in like reverse order where it chops down, hits a low later. That's way off in the future. I think it's possible. I don't think it's written in stone, right? And then there's other things too, like you then look at, well, what about the possibility that there is a market crash? Okay, so then you have to look at the possibility that, yeah, this downward move results in some kind of either an LPS, right, which is what we were saying, which is just low, it could be low, but I wouldn't want to put it past 190, or a spring where this is like a phase B top, and you end up coming really low for a spring. You know where that happened? That happened in 2008. And that's kind of the thing that a lot of people are like remembering, because they remember that 2008 crash seemed to come out of nowhere, but it really didn't. It's and I don't know if I'll be able to see it on the daily. We should just look at weekly. 2008 crash was a double topping mechanism as well. It's like an M shape. And yeah, this one doesn't really look like it. But if you go look at SPY, there's a push up and then it came back down. Actually, it's probably in the same spot here, and then it pushes back up. drives the price low for a spring and then reacts. And it took years, really long time, the build out for that. I wouldn't surprise me, so if this ended up coming up high, would it surprise me to see this come back down and hit some new low in 2026? No, but that's neither here nor there yet, and the fact of the matter is that after each of these two dips, like the COVID dip and the February of 09, the 2008 crash, those two crashes are met by bullish periods. Like once this kind of reaction happens, you do have some retesting, it comes up and comes back down and retests. And then once it breaks out, you have pretty long periods here, decent periods of growth and then retest. So, if the market thinks it's necessary, if we're overstrung, it wouldn't surprise me to see it kind of capitulate at some point back down, and check another low again in like a spring action. But I still think it'd probably be after we push up. That's just my estimation. Again, neither here nor there. And then if you ask the question, like, does it have to do that? Do you think it has to? I don't know. We already went back and checked that creek. It already happened. It literally happened over the course of like a year. It was a really long retest. So the idea that we just have to come back down just doesn't make any sense to me. From a liquidity standpoint, there should be zero need for that. There just shouldn't be. Like, it would have to be some kind of a catalyst event that causes it to come dropping. Because you don't come back and check a creek for a year and then suddenly have to come do it again, 6 months later or a half a year later. It just doesn't make any sense. So, if it's a topping action, it's a topping action, and we'll see what happens. But maybe there's a need for some other reason. Maybe there's going to be a massive, maybe World War III starts or something. I don't know. Yeah, there's going to be something that happens that would have to drive it down. I can't see that. That's crystal ball nonsense, and I can't do that. But housing crash, some people saw it coming. Most people didn't. COVID, I'm sure some people saw it coming. Most people didn't. There's like things like that where we're just not going to know. So anyways, that's way off in the future. But I think in the near term, I'm still looking at this as a highly probable push to 252.91. I think it's going to happen. So I want to trade it, make the money while I can. And then, for the next X amount of time, maybe it's bullish, but it's kind of weak bullish and just kind of chills out here. Maybe it becomes more bearish. We'll find out. AMC and GME are the same way. Like, I think we're going to get pushes all the same, and then I don't think we're just going to keep going up. I'm not of that opinion. I think we get those longer term pushes, and then we have to deal with major creeks, and it's going to take time. So, and I've been very I've been very optimistic about AMC specifically, that it can go up and eventually reach like 100 or something like that, maybe even more. But, $80 or $90 seems very reasonable to me, but a lot of those targets were not until 2025 or 2026. I just can't see it moving faster at this time. And that's where people don't like me as a analyst, if you want to call me that, because chart analyst, because you're like, well, that's too long or something, or you really think it's going to take that. I don't know what to tell you. I'm just kind of reading the chart. I don't know. You guys are like, stop saying I don't know, Booksy. All I can do is just kind of look at the setup. And I was trying to do this, by the way, last night. I don't know why I was doing it last night. I need to sleep better. I've not been sleeping well. I was trying to do it last night. The setup is bizarre. It's not the same. And I can't quite put my finger on it just yet. So let me show you what I was doing. So what I was trying to do was measure from the breakdown to the future, like where do you see this thing going, right? And how long does it take to get there? And actually, I'm finding that it's fairly reliable. So if you look at the overall pattern here, it's a pretty good pattern. There's consistency is what I mean. Like there's sort of a consistency in the motions. If you look at it from just a GAN setup, that it plays out pretty well, like along these kind of markers, but I couldn't quite get it to fit just right. So what I was trying to do was to look at the top, which I'm using, and maybe I should use the breakdown, which is actually over here in like August. I don't know. And then use the place where it creates that center mark that I've been using and see if I can generate like a timeline. And the only thing that seems really consistent, and I checked like 5 of these last night, the only thing that seems consistent is that about 50% is when you hit the peak. And that's very consistent. Like across the board, that seems to be the case. So you usually hit a peak about 50%, and then naturally like there's a breakdown period. And so this 2 periods right here, the area between 50 and the 618, usually you hit a peak and then you do some kind of an up thrust motion and you start your cat ears. That's about the only thing that I found that was super consistent. The low and the initial kind of sideways action are not always consistent with everything else. So like the bottoming sometimes is closer to the 0.5, like sometimes it's like right up on the 0.5 and it's just this massive move. Sometimes the bottoming is right on the 382 if you set up this on the 2.5, but you know, you can easily like take this and just expand it. So if you want to be biased about it, you can say like, well, I think it's over here, you know what I mean? It's pretty easy to do. So what I was trying to do is like pick out milestone events. So like when I do it like that, if I do like the 618 as the drop, or the 7.5 as the drop, it kind of makes more sense to me because then I'm like, well, look, this is really close to where the 2.5 is and the bottom, and then the 0.5 is almost perfectly on, right? So if you kind of look at it from that point of view, the timing of it is actually quite consistent, right? You could see it as like this. It's very mechanical almost. It looks like it's set up. If you ignore that, I know you guys are like, well, you can't ignore that. Well, I did. I don't know what to tell you. So it looks pretty mechanical when you do it from that point of view. So then that would tell me that what? Well, I guess the resulting action to come back up would be in the remaining time period. I mean, and that's all I could really tell you because I looked through it and some of them go up and some of them go down. So it's difficult to say. Some of them have like a downward period. Some of them, if they're bullish, they have an upward period. So I guess if I had to venture a guess, I would say this is probably as close as I'm ever going to get. Something roughly around here. And yeah, it's just hard to say. It's still like a window, but it works pretty well. So that looks like November of 2025, which is kind of like, again, like looking at what we saw in IWM just a minute ago, that would kind of imply that you're going to have an upward cycle and then come back down by that point. And that might make sense. And then start a new upward cycle. Because that was like the low, right? So you'd have like an upward motion and then come back down and then have another upward motion. And that's how those could work. This would be like the bigger one, right? That's the only thing I could really say. I wish I had a better answer, but this is the best I came up with. I looked at it a lot of different ways. I compared it to different sizes. There's just no one way to do it. So this is pretty close, I think, to accurate. And this is fairly consistent, especially the 5 and the 62%. It's pretty consistent with what you see on every one of the setups. Is that this is almost always like the big wave right here going into the halfway point, and then the rest of it kind of mirrors out. Yeah. So if I were going to make any kind of a guess, I would say that that's kind of roughly where you end up in 2026, is about like $130 or something like that. It makes sense to me, although for some they're going to say that's too long. But it does make sense to me on a number of levels. I find that to be a fairly decent estimation. And if you look at the cross, it makes perfect sense because you're kind of entering that region in the same area. So I think the one thing that's probably confusing is like, what is the implication for the short term? That I don't really know. The short term is a different beast altogether. You do need to cross this creek. There's no doubt in my mind that's gotta happen. And it probably is most likely going to be tested now. You know, maybe going into, again, if we're looking at these as like waveforms, going into like September and probably election time, right? So somewhere by September, you would have had to have either broken out or tested this or something. This is where the cookie kind of crumbles apart, though, because there's not really any way to validate it beyond there. Like we don't have the ability to know if it's going to actually breach this or not, you know. And if it did, cool. But I guess the greater issue that I would find with that is that there's so many things that can happen on a bottom that may not be what you want. Because technically, like, as long as this goes up and pushes the creek, you could always have like a pullback that's really steep, and then you'd have to cross it again, you know, later on. And so what I would love to see is it push up to like these 15 or 18 mark and then stay above 6 going into 2026. But that may not be the reality of it. The reality of it might be that this is the first reaction, this is the auto reaction, and you do end up with a really long-term phase B bottoming. You know, it's just totally possible that this is a phase B top, and then you end up with a spring later and go low. And none of that seems out of the question. When you look at a multi-year cycle, you're like, yeah, I could see that. Definitely on AMC, I'm like, yep, I could totally see it pushing up to like 18 and then come crashing back down over the course of a year to wipe back down to like $2 again, and then have some weird little micro spring. And this is when Nick P and the boys are like, yeah, we knew it was gonna happen. It goes to 190, and then it just rockets. Nick P and the boys, we knew it was gonna happen. Boom. I could see it being, because AMC's a kind of a turd stock sometimes. It does stuff like that. But, you know, on a gradual like waveform basis, this is just essentially like a gigantic wave. So this totally makes sense to me. 30 Mike and the boys. Yeah, so I'm thinking right now we're going to be pressing up against here, and we could go pretty high, but I don't think we're going to, like at the 20s was kind of what I was thinking, and then I know everyone else wants to just kind of rock it right now and go up, but this still seems pretty right to me. So maybe July of 2025. That's a little bit earlier. There's like a window. It's still a ways off. It doesn't really matter. That's a big one. It's like a 6-month period of possibility, so it's quite a lot. I do think this is where we're going to end up. I really do. And I don't exactly know how we're going to get there 100% of the way, but I would venture to guess that when we do get there, it's going to match some ridiculous number from the past. Probably this drop off right here. It's the original stock price. Yep, probably. Yeah, I don't think we're going to hit 35 in July, but you got to do you, you know? You got to stay true to what you think. I think we might get up to, if we get another push, I think we're probably going to go to like 15. But I think it's going to be more gradual. We might get one more push after that. So like a third triple top kind of motion. One, and then push again, and then a final push up. Yeah, no, I am. That's why I'm usually a little bit more accurate on other stocks. So, but AMC is one of these things that you kind of cut your teeth on, and then you really don't have to worry about it being ever being much harder, to be honest. And everything else feels like easy. Like that's why I look at IWM and I'm like, I don't know, man. It looks pretty simple. Like, it's like the setup looks simpler. I don't know what to say. Like it actually makes nice bottoms. Like jumps creeks and rechecks them. Like it's not. I know it's an ETF and like of course it's going to be a little more regular, but yeah, that's why I've been looking at MPW as like maybe a litmus test in some ways. I don't know. There's others that I look at too, but I'm so used to stocks being bad and like oppressive because of AMC. I guess if you were looking at this like a rotation, you probably would think that this could easily get to the high beforehand and then form a distribution cycle here. So be a way up here for a while. The thing is like that's not really what we see evidenced in the stock. We tend to see more time spent on the bottoms, less time in the peaks. So like I had looked at that before and thought this could be like a long-term period up here, and it really takes like this long or something. We get there really early. I don't think that's likely the case. So I think this move is very specific to this particular setup. And I think that in reverse, it would probably be more like something like this, like a really weak looking distribution once we get up there. But you don't think we just rocket to the moon? I don't think we do. But I'm also of the opinion that this is probably designed to shake a ton of people out, and then they're going to use it as a selling opportunity here, and then we'll see. Long term, I wouldn't be surprised if it did eventually go higher, but short term, I think this is being used as a kind of a leverage point. So like I would expect it to go back down, and to be realistic with you, like this is a more realistic price target in the 20s or something for something like AMC if it fixes its debt problem. And then we'll see, you know, maybe after a while it can come back up. 2028, yeah, something like that. I mean, it would be crazy long. I could see it. Maybe go back and retest highs in like 2030 or something ridiculous. And by the way, like I'm looking at this and I'm like, yeah, that seems right. This looks like a really normal setup to me. Like this looks like it could be a big bottom. This looks like it could be just an M cross, you know. I don't know. Like everything about it looks pretty regular when I zoom out at this point in time, but none of it would be fast because the time it takes to make these moves is just not that fast. It just isn't. So here's what we've seen on AMC in the past. Best case scenario, this ends up being an SOS. You get kind of a third motion, and it ends up being that cup and handle that everyone wants to talk about. And it's kind of like this big motion. And then this is really where you get the beefy move that everyone's been wanting. And I don't frankly think this is as likely, but it would be like right here. Because again, like what this does is it goes back and it retests that original breakdown level, and if it's confirmed, then this is essentially like a spring with an exit, and then this is the only time I've seen this really happen in this way was in August. There's like an August and an August. It's like July of 2021 is a good example of that. You can go look it up. And there's a big giant double M cross right here that pushes over the first creek, first M, second M breaches higher. And then the last one is really just a push back above the first one. And it takes just as long as the others. Maybe not as quite as long, but, and then you get the big move. And frankly, if you look at that August setup, after that big move, that wave is crushed. And then you go through a long term, this is just the way that it happened there. But after that happens, you go through a really big drop. You go through a long term reaccumulation, and then you eventually can come back up. And all that would happen at that point is you basically just probably distribute, because this would be like a massive, massive wave. Then you guys are like, what? He's out in 2050s. I'm saying like long term, and you'd have some kind of stock splits before then. Like it would be, price wouldn't look like it's like thousands of dollars. Then you'd have to come back down for like some kind of a massive, massive creek test, right? Like a multi-year one. And they would come all the way back down to like 14 or something. That would be the brutal part. And frankly, at that point, I don't think anyone else is really paying attention to this anymore. I mean, maybe. But after this kind of a drop, you'd probably be like done. And I could see this happening over the course of years. This looks kind of like our micro right now, doesn't it? A little drop in and then a push up. Yeah, this could be a big bottom. And then MOAS really happens. I mean, in theory, like it could, but I think that what more likely happens is this ends up being like a gigantic range as well. So you'd have like an auto reaction, and then over time, you'd have like a phase B top, and then over time, you know, you'd eventually like come back down and you'd form like a spring. And everybody's like done with this play. This is ridiculous. Y'all are like, none of this is going to happen, Booksy. It's just going to go up. And then you do another waveform. This time it's from like this bottom through these guys. And this is the big one. I mean, in theory, this is kind of how, as an operator, I'd work it. Assuming I wasn't going to distribute and just sell it back down to like 0. Yeah, this is like 2050. I'm not kidding. Like, you guys, I'm being genuinely serious. And like, none of this even like assumes people would still be in the play. I think it's unlikely. They would milk it as long as they could. But that's the size of this accumulation, you know, because we're talking about this. You got to imagine, like, remember we've been talking about this as like a giant S curve. And now this is like, this is the midline. So if that's the case, if this is a giant S curve, you would expect there to be a big push up, a big 50-50 maybe push up over eventually, you know, some time. But then you expect nothing else, like, because the remaining action, if we're looking at the motif here, is a range. And so you have to then look at it as if you would a range, and it's not bad, it's just not, it's not like a long-term thing, you know, or it's not a short-term thing. It would have to then be a range around $69. I mean, it really literally is the exact same thing we just saw on a lower scale or on a different time frame, you know. And there's your little cat ear breakdown in the future, you know what I mean? So if you want my, like, genuinely, like, that's my opinion about this. If AMC were to transform itself over time and somehow, Atomera would be gone by then. But if you're looking at the way the stock is being traded, maybe it'd be a little more compressed than I drew it, but maybe more like 2040, not 2050. So compress all this a bit. That's kind of what we're seeing as the pattern. It really is. And who knows, by this time, maybe it just trades sideways. That's crazy stuff, but I just did these comparisons like left and right all this past week, and you saw me do it. I was on stream for like 2 hours doing it on Sunday. It's basically that's what this is. It's a big giant shallow S-curve bottom potentially. So the resulting action would be big, but it'd have to take a long time. It just would. Yeah, and I'm not of the opinion that yeah, that looks like perfect. Oh my gosh, it's so funny, dude. It's perfect. No, it's not like perfect. It's really close. There you go. This is the big move, which thankfully we're kind of in the midst of it, but it's not a guarantee. One thing I've noticed about AMC's setup is that there's a strange kind of it's a strange setup because there's a bit of an angle of everything. So part of me thinks that this happens, but somehow it happens like more downward, like everything's like skewed. If you ever play with like Photoshop or something, you can like skew images where you like drag the top or the bottom out of alignment and it causes them to like stretch. For some reason, AMC's got this vibe to me on the macro where everything's like skewed down. So like we get something like this, but it's all like, I don't know, like dragged this away, I guess. I don't know how to describe it. It's all like kind of angled downward more. So a lot less like I've drawn it, more like angled. I could totally see it. That's the range build out. That's how they build out the range. Anyways, that's how they've been doing it on AMC. It could change. You change operators, it could change quite a bit. But for now, that's actually probably the best I could do. I think it's possible. You can get a 50-50 right around this level. And then potentially you can go. You get your moonshot. These are massive moves, by the way. I mean, this is not insignificant. This is like a 60,000% move. Seems a little unrealistic. Multi-generational operator. The operator is not... yeah, it is kind of like a diamond bottom. You're right. But the operator is not... the operator is going to stay as long as retail's on the play. And then they might change what they do. So right now, this is very much the way that they've traded AMC. Just like this. Where this could even be like a really low bottom. But, so first you have to jump the local creek and the bottom. So like there's two big targets that I'm watching. And that's why I've drawn it where I've drawn it, because I think that 1574 seems realistic to me, up to maybe 18. This area is kind of like the big one. We need to go up and check, I think, that creek down and then the previous supports here and push above it a bit. And then if we can do that, then we'll be in shape for a backup period. So that would be like M1 where you push up and then you would come back down. If that makes sense. I think it makes more sense to me than just dropping now or whatever. I mean, the back up to $3 right now, it's fine. It wouldn't hurt anything. It would just be like a throwback. But dropping down to a new low here is kind of brings everything out even further. And then we may not cross the creek till way later, way lower. So that's a different setup. But I think if we went up now and hit like 15 or 16, maybe even up to 18, I think we do an adequate amount to check. And then I think we could come back down and deal with like sort of a bottoming action at that point. And I don't know exactly how low it goes, but could be really low. And then more than likely, if this is going to be bullish into November, that doesn't actually happen. We actually kind of stay here and we do that triple top motion into November. like 1, 2, 3. Makes sense to me because we were talking about that on the micro, and it happens a lot on AMC. So you get kind of a flat run up, and then you do it again. And then this ends up being kind of a topping action. Here. Then you break down. You guys are like, why couldn't that happen right here? I mean, it could happen right here, but it usually happens in those sets of almost like a head and shoulder. It's kind of in like sets of 3. Because it's on a rise, this third shoulder still often comes higher than the first or the middle. So visually it doesn't look like head and shoulder because technically it came higher or something. But like in theory, like that's often what happens because it's kind of on an angle upward. Right? And then we come back down and make a decision about whether we continue or not. And my guess is, who knows? This is off in the future, but my guess is we'll probably at that point come back. This is a very loose drawing of what I think would probably happen. Anyways, and then you wouldn't really test it again until much later. So that gives you a really clean big picture M cross, because then you have kind of like this first one usually looks like a volcano or something, and the second one looks more like a mountain because it's breaking the first. I used to call them that. There's a reason they kind of look like that. And then the second one is usually like this big push over the creek, and then it just kind of comes back down. And then, yeah, after that point, who knows? Maybe you can get the big push. Or maybe it's like a micro version of like a macro move, and you have to do this. And then you see the bigger version of it play out. So on like the big picture, you zoom out and you're like, oh yeah, it looks like, you know, it looks like an M cross here, and then it comes up again, and this is like another one. And then you have a bigger version of it, blah, 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 blah. We don't know that yet because we don't have the data built in yet. I could guess, but I'm not going to be able to get it quite right. I think for folks that are looking for the payout, we're talking about maybe this is enough for most people. So, you know, if we get to that point, this is where I think you could have dynamic changes in the stock, because in 2026 or whatever, if that comes up to like $100, if it took that long, a lot of people will be shaken out here anyways. And if it took that long to get there, at that point, I think folks would be like, done. And I don't know if you necessarily even get the rest of this. For all we know, it could just assume a downtrend, never break here, and just kind of head back down. And it's just a zigzag. So we don't know. Those are things that I can't, there's no way I can predict that. This is not possible. I would imagine that a lot of people will get out if it hit 116. I really do. And, you know, unless they've averaged down, it's a loss, but at least it's not like the worst loss. For people that got in way back here on this massive buy-in. So, yeah, so a lot of folks are not going to look at anything beyond this 15 level. And that's why I'm wondering if we spend a lot of time kind of pressing up against here, and then like later we get one more big push just to kind of check the boxes, and that's the end. And it wouldn't surprise me. You know, this idea of like a multi-year squeeze, big range, it's 100% contingent on buy-in and liquidity. So without it, I don't think you have anything beyond probably this guy. This is the one that I'm like the most, I don't want to say convinced, but this is kind of the one that I'm the most convinced will happen, is this right here. I have a stronger conviction about that than pretty much anything else. with AMC. I don't know. There's just a lot of reasons why I think that's going to happen. And it's mostly because no matter what seems to happen on a stock, almost always that gets checked again in this particular module. So, like, no matter what goes on, this typically gets tested again. So whether we're really low because we've done a low spring or we're already up here around 15, I don't particularly think it matters too much. Anyways, yeah, expectations were kind of sideways today. Maybe we get some up, maybe not. We never approached this creek, so we're still a ways off. You could go sideways till close, almost. I think it'll make a decision at some point. I'm going to try to keep an eye on it, but I'm about to head out for lunch hour, and maybe it'll run because I'm leaving. AMC was in the same boat. I don't really feel like it made any move that was particularly bad today. Just nothing. Yeah, this is good. This is fine. Nothing like... That's kind of messed up. I don't like that. I don't like that it came that high and hit that creek, but it's done the same thing here, so maybe it's doing a similar play out on this. I could see that. So yeah, I might be right about this. We might get this secondary motion. So this doesn't have to come all the way down. It could be an LPS and stay significantly higher. So this I would watch for, and then I would see if it jumps over the creek. If this happens today, then Wednesday should be a really good day. Or Thursday, I should say, would be a really good day, potentially. If it doesn't happen today, totally cool. I'm not really worried about it. So if this stays kind of flat, not a big deal. My expectation is then Thursday we're going to be, again, sort of sideways. And then we'll have to wait and see. Same motion, different height. And GME, kind of the same deal. Like, I kind of expect GME will go up because it hasn't even gone back to retest 2763 yet. And I get the feeling we're going to see 2763 or near that and then come back underneath 27 and then probably chop. It'd be weird for us to stay low, like really low this whole time. But we've jumped over one creek here with this double M shape. So I think we're going to make another one that's bigger. I think it's likely. Yeah, you can see the scale of it. I mean, it could be an LSPY, but it's not testing the bottom. It would have to be one here, and I don't really see a necessity for that just yet. I think what's more likely is we're going to get a push out, and then, I don't know, man. Could even set up for another kind of spring later, where we do drop a little lower. You can see it's in a bit of a channel, so I don't know. This just makes more sense to me. No matter how we get there, it doesn't make a huge difference. Sideways is sideways. That's all I can do for you today. I got to get going. Sorry. I'll check out Tesla some other time. Remind me next time I get on. We'll check it out. I don't plan on doing a stream tomorrow. I probably need to take a break. But if I did get on, it would probably just be to chart some stuff. So we might do like a free for all or whatever. You just pick something. I'll try to chart it. That's if you're really bored. But yeah, I could see this maybe dropping one more time here. Trying to get down. We'll see. Anyways, y'all, best of luck. Hope you enjoyed it today. I thought we did a lot of good stuff. So hopefully it pans out for everybody. Appreciate your time. And I will catch you all later.